Hi, good morning to all. Today we will be doing the SLCM marathon. Now I request you all to share the link of this video to all your friends as well. Okay, so who can attend this lecture? And yes, I will be conducting in English for two reasons. One is for the students who. Good morning to all. Today we will be doing the SLCM marathon. Okay. Now, I request you all to share the link of this video to all your friends as well. Okay. So first, you can share the link with your friends. It will be in English. The marathon is for two reasons. One is for all the students who prefer to have lectures in English. So I will be having in English. And second, for those whose English is not powerful like me, it's not very strong. But since we have to write the paper in English, it is very important that we listen to the legal terms, we listen in English language, only then we will be able to write that in the exam. It's very difficult to learn in one language and then write the paper in another language. Okay. So today, first very important thing is what all I am going to cover. Now, first is I will take you through the your grades of the chapter, which chapter has the maximum amount of weightage, and obviously your part B is the most important. Okay, and I have covered the part B entirely in detail in the previous marathon. So in our YouTube channel, you go to the playlist. There you will see the video of my earlier SLCM marathon. In this marathon, I'll cover the topics which I have not covered earlier. So these two topics are already covered in depth with the exam questions. So go ahead and do that. Now, another very important and technical chapter is your SEBI ICDR regulations 2018. Now, this is very important not only from executive point of view but also professional. And as you can see, they definitely ask 2 to 3 questions from this topic. ICDR regulation, if you just YouTube ICDR regulations, you will see my lecture. I have covered this really well with the amendments. Okay, so I had covered it in a way that I had covered with the amendments. So go ahead, you can do the ICDR regulation, and it is a very quick summary of such a big act with all the important points covered. So your top 3 I have already covered. I am taking you all through what all you all can do with the earlier lectures as well. Then recently I have taken the takeover code, SEBI takeover code. If you go in our YouTube channel live section, you will see the takeover code. There are 2 lectures, I guess. I have covered everything with the amendment there. So you can do. So if you go to see, I have almost covered everything for you all. Now coming to mutual funds is very simple. Okay, I have also done few sums on SEBI sums where I have covered every single practical paper. Now if you want to clear and get very good marks in SEBI SLCM subject, remember that the first 10-15 marks will be your practical sums. So definitely you should know the practical sums very well. Today, just before I tell you what I will be doing, there is one more session in my previous marathon I have taken of share-based employee benefits. Extremely important. According to me, minimum 10 marks will come from there. It is covered in the previous marathon only. Okay, so 2 videos you have to watch. One is the earlier marathon. Today I will be covering something which I have not covered before and is of very important marks, that is your SEBI LODR. I will cover your entire SEBI LODR, which is very important, and with the amendments. Okay, so this will be after some time, and I will also cover one tiny little topic, that is your Depository Act. It is very simple, so we will cover that first. So LODR I will cover later on in the lecture. First I will cover 1-2 simple topics, then I will come to the massive topic of SEBI LODR. Till here it is clear? So good to go. Can we start? Yes. So LODR, everyone said yes, that is on my hit list. Okay, so don't worry, I will be covering that in a very nice manner. That chapter, if you have no knowledge, you can sit, because whatever I covered in depth. Okay, so first I'll just cover Depositories Act. Depositories Act, that I will be covering, and then I will cover the LODR. Okay, so now I'm covering in a rapid manner SEBI Depositories Act. Remember, for SLCM, you can really get my lectures very nicely on YouTube and finish it off. Okay, study it well. I have told you all the important chapters. I have taken revision lectures for them. Now we are starting with Depositories Act. Now again, a very important topic. There was an amendment in 2022. I'll tell you also which is that. That is why I'm just taking this up. Real 5-mark question can be framed from here. So let's start. First is, what do you mean by the term depository? So depository in India is an organization that holds securities in electronic form. Okay, so have you heard of demat shares, dematerialization, etc.? So earlier there were physical shares that had share certificates. With time we have switched our mindset from physical shares, like we have share certificates. Okay, so that was your physical form of holding shares. Now obviously, if all of you all, I believe you all also must be having some investments, your parents must be some investments, but now they don't hold in share certificate, they don't hold in physical form, they hold shares in demat form. Dematerialization. What do you mean by dematerialization? Means no material only, or online trading is there, buy sell can be done. So this is called as electronic form of holding the shares. There are benefits of demat. Obviously, what is the benefit? It is easy buying, selling, very easy to trade. Okay, so these are the benefits, and all the disadvantages of paperwork can be let go, negated, can be saved, all that share certificate tone, all that, no issue will be there. Now with respect to demat, okay, electronic form, in India there is an organization that will hold all these electronic shares. That organization is called as depository. There are only 2 depositories in India, that is NSDL and CDSL. Clear? There are only 2 depositories that hold securities in electronic form, that is NSDL and CDSL. Now if you are an investor, you cannot directly go to NSDL, CDSL if you want to buy shares online. You have to, wherever you have your demat account, wherever you have your stockbroker, you will go approach them. With them you will file the particular form, that is your demat form, and you will trade on the intermediaries portal. This intermediary is the stockbrokers are nothing but called as depository participant. They act as a intermediary, interlink, interface between investor and depository. So again, I want you all to put in the chat box, which is the organization that holds shares in electronic form? Depositories. How many depositories are there in India? 2 depositories, NSDL and CDSL. Can investor directly open account with NSDL, CDSL? Answer is no. Investor will have to hire a broker called as depository participant. With this participant on their portal you will trade, and in the back end the depository will connect with the depository participant will connect with the depository. Clear till here? Yes. Now, how many depository participants do you know? So obviously you must be having your account with Sher Khan. Can you put in the chat box who is your broker? Sher Khan. There is Zerodha, India's biggest trading platform. Who else is there? There is Grow. There is ICICI Securities. Okay, HDFC Securities, all of them are depository participant. So in India, there are two depositories, NSDL, CDSL. If you want to open your account, you will open with a depository participant who will further connect with the NSDL and CDSL. Now, what is the difference between NSDL and CDSL? NSDL was obviously, it caters to the companies listed on NSE, mainly on National Stock Exchange. CDSL is connected mainly with the Bombay Stock Exchange. Clear till here? So NSDL was the first depository in India. Okay. NSDL was promoted by IDBI, UTI and NSE. Whereas CDSL came into existence in 1999, was promoted by the Bombay Stock Exchange. Clear till here? So NSE promoted the NSDL, CDSL was promoted by the CDSL. So again, you have the Depositories Act 1996. Depository is an organization that helps the investor hold shares in electronic form through the DP. Two DPs are there, two depositories are there, NSDL and CDSL. Then who is the depository participant? The participant is an interface interlink between the depository and the investor. It is like the agent for the investor. So any application that I have to do for dematerialization, I will make to DP. DP will connect to depository. Okay. Now in India, the top brokers are there. I believe you all also must be having your broking or trading app in any of this. Okay. Very good. Angel broking, someone said. So here you have Angel broking. Some have HDFC. I prefer Zerodha, Sherkan, Motilal Oswal, Kotak, Karvi. All of them are there. Clear? So these are a few examples you can quote in the exam. Now the benefits of depository system. Now what is the benefits of holding shares online and trading online? Obviously elimination of bad deliveries. When I say bad deliveries means the physical share certificate got torn, was not delivered, was delivered late. That doesn't happen only because on buying automatically shares are credited in your account. Elimination of all risk related with physical share certificates such as loss, stolen, torn, etc. That all doesn't come here. Immediate transfer and registration of security. So headings you can remember. Online shares you can immediately sell. Then comes faster disbursement of non-cash benefits, right issue, etc. Very, very simple. If you have certain shares, automatically the bonus also will get credited in the demat account. Now, reduction in handling of huge volume of paper. Obviously, if you have a lot of shares, how will you handle so many share certificates? In your demat account, you can have 50 companies you can invest and no paperwork. Elimination of problem related to change in address, transmission, all that is not required only. Elimination of problems relating to selling securities on behalf of minor. If it is physical shares, then you have to take the certificate, guardianship certificate, all of that and go and sell. But online, obviously, you'll take the phone of the minor and trade. Less expensive, less time consuming. And one very important point, earlier, before the amendment, there was no stamp duty on transfer of demat shares, but now with the amendment this has now gone, this has been repealed and now stamp duty is levied. Stamp duty levied on transfer of demat shares. So if you want to see this, go and check your statement, your demat account. Go and check in the statement. Whenever you transfer, there will be stamp duty also levied. So apart from brokerage, you are also paying stamp duty. Remember this. Now, another important point which they ask in the exam also, that all these shares which are held in dematerialized form, in electronic form, will be fungible in form. Will be fungible. Now, what do you mean by fungible? We will look. Okay. Fungibility means interchangeability. They are one and the same. One share is like the other share only. Earlier in physical share certificates, they are not fungible. One share is not like the other share. Why? Because every share certificate will have distinctive number, a share certificate number. So this share certificate number is not same as that share certificate because of the difference in numbers. But moment a share is converted into electronic form, the distinctiveness will be removed. There will be no distinctiveness, no difference, and all of them are interchangeable and same. Common sense, in physical shares you will have share certificate number, but in online there is no share certificate number, so you can easily trade. So this is called as fungibility. Mark it as important. They ask in the exam and sometimes students don't know. Okay. Now fungibility. Fungibility means interchangeability. Refers to goods, services, commodities capable of being substituted with anything special in type, form, function. So one share is just like the other share and they are interchangeable without any difference. Physical share certificates are not interchangeable. They are different since they have different distinctive numbers. So section 9 states that depositories, securities in depositories shall be in fungible form. It states that all the securities held in fungible form, all the securities of the same shall be interchangeable. It is like withdrawing money from the bank without bothering about the distinctive number of the currency. As we are aware, shares in physical form carry distinctive numbers. Physical forms have distinctive numbers which differentiates one share from the others, like we see on currency notes. When physical shares are dematerialized, it results in loss of their identity. This is called as fungibility. Okay, so rupees 10 bank 100 bank note is interchangeable with any other 100 rupees bank note without to worry about the distinctive number. Now understand, if they ask in the exam, I know you understood, but you should be able to build an answer with this language. So fungibility, you will write section 9. You will say that securities in fungible are in fungible form. That means they are interchangeable. Then write about physical share certificates. Physical share certificates carry distinctive numbers. Now, what do you mean by fungibility? Fungibility means one asset we can be easily interchanged with the other. Now coming to dematerialization and rematerialization. Okay, so this is one very simple thing. What happened is, one of my family members, they found that their parents and grandfathers had lot of share certificates. So when they opened the loft on the cupboard, they realized there's so many share certificates of companies which are listed today. They must have bought years back, so they have physical share certificates. So what they can do? Can they sell the shares? Can they sell the shares, those old share certificates which they got? So what they have done, they have taken these physical share certificates, and they said we will convert it into electronic form, into electronic or demat form. Yes or no? Simple concept. You will take all these physical shares and you will convert it into demat form. How will you do? So the investor will have to file a dematerialization request form with the depository participant. This depository participant will go to whom? Depository participant will go to depository. Clear? Then they will go, the depository will then, will they just issue the shares, or depository will have to connect to the company, will have to talk to the company that listen, this person is saying he has physical share certificates. So then the investor will give to DP will give to depository the physical share certificates, the DP will give to company. The company will verify that whether this is proper, then the company will inform depository that yes, take the physical shares, allot the electronic shares. Then depository will inform DP and then DP will inform investor. Clear? So let's read. Dematerialization is a process by which physical shares are converted into electronic form. It is a scriptless or dematerialized trading. The process of DP is investor opens account with DP, fills dematerialization request form, he lodges with the DP, DP will inform depository, depository will connect with the company's RTAs. They will connect with the company's RTAs. Now tell me one thing, if the investor is holding shares of Mukesh Ambani of Reliance Industries, will depository call Mukesh Ambani? No. Reliance Industries will have their own registrar and share transfer agents to handle this process. They handle all these share transfers, share allotments, everything. So RTAs are, intermediaries of SEBI who helps listed company in all these transfer process. So the depository will connect with the RTA of the company and tell, and then RTA who's working on behalf of the company will inform the DP. Then the DP will send the notification to the issuer and so on. Clear till here? Now coming to rematerialization. Rematerialization. Now what is rematerialization? Let's understand. Now my mom, she has opened a Demat account, but she doesn't know how to trade in mobile phone. She's not comfortable with the app. So what she can do? Again, very simple. The investor wants physical shares now. So same thing, you will ask for rematerialization. Make it paper again. Rematerialization request form. You will have to give to DP. DP will give to depository and depository will connect with the company's registrar and share transfer agents. They will say this person wants physical shares. So then the company will say, okay, fine, his electronic shares, you can take it back and instead give him paper form. This you are making it paper again, rematerializing the concept. Clear? So the flow is the same. Now coming to depository and custodian, what is the difference? Depository and custodian, if they ask you for 2-3 marks, what you will write? So depository is with shares, with respect to shares only, with respect to shares, whereas custodian could be of anything. What do you mean by custodian? Custodian is someone who is taking care, who has custody of something. Okay, so if you are going outside and you keep your child into your neighbor's house, okay, you say that I am going out, me and my wife are going out, now the child will disturb us in the movie. So you keep the child in the custody of the neighbor. So they will be called as custodian. Custodian could be of anything. Okay, you are going, you are giving your books to your parents and you are leaving, they become custodian. Custodian can be of anything. Depository is a custodian of shares of the investor. Depository is a custodian of shares of the investor. Clear? So depository is an organization that holds shares of the investor as a custodian, whereas custodian means a custody of anything. Okay, so there is a separate act for depository, where there is no a separate act. Now we are reading Depositories Act 1996, but there is no separate act for custodian. So two distinguishes you can write. Now they are saying depository and bank. In bank we have money, in depository we have shares. Okay, in bank you can open your account, but with depository you can't open account. You open with DP. Okay, they help transfer of shares. Here they help transfer of money. Okay, here they help that money is kept safely. Here they help that there is safekeeping of electronic shares. Okay. Now next, models of depository. Various models of depository. So let's understand immobilization. Now they ask sometimes immobilization also for 2 marks, but students sometimes don't know what is immobilization. Okay. Now let's understand. Depositories depositories also provide additional facility of keeping the physical share certificates as safe custody. So I'll give you an example. If you have lot of gold, you have lot of share certificates, where will you keep? Will you keep in your house? You think people keep all the important documents in the house, or they keep in bank lockers? So gold, and sometimes they want to keep it safe, so they go and keep in the bank locker. Now I told you, depositories and depository participants are also banks only. Like HDFC Bank can provide you DP services where you can open Demat account with HDFC Bank. You can they also, so HDFC Bank, ICICI Bank, SBI Bank, they are banks and they give other services of depository participants also. So if I have certain shares, I can go and keep it with them in their lockers. What the bank will do, what the depository will do, they will keep the physical share certificates in safe custody. So first line is over, where physical share certificates are kept in vaults, tijori, what do you call this, vaults, lockers with the depository for safe custody. One. Second, now imagine if I have kept with physical share certificates with the depository, and on those shares bonus is declared. So what will happen? Will they come and give me, or I will say all the future transfers also give it with depository only. So all subsequent transactions in these securities will be done in book entry form, not in electronic form. Electronic form is trading online. I am not doing online. Depository giving additional service of holding, because when we do rematerialization, so all that time also we have physical shares, right? So I can say you keep with you. So all the subsequent transfers will be done in book entry form. Okay. Now, can the owner of the share remove this physical shares from the depository? Obviously, yes. The owner has a right to withdraw his physical shares as and when he desires. Okay. Now, if imagine there is a fresh issue done. Fresh issue means the company has given some lot of shares. So all those can be done in a form of a jumbo share certificate can be issued, right? Representing the entire issue, or you want for 100 shares, you want 100 share certificates, or you want one jumbo share certificate. What do you want? If you have 100 shares, would you want 100 share certificates or you want one jumbo share certificate? Obviously you would want a jumbo share certificate. So immobilization of fresh issue can be achieved by a jumbo share certificate representing the entire issue in the name of the depository only, okay, as a nominee of the beneficial owner. So I am the beneficial owner, as my nominee, as my caretaker, it will be kept with the depository. Clear till here? We did what do you mean by dematerialization. Dematerialization means holding shares in electronic form. It is a process by which physical share certificates are converted into online shares, electronic form. This is done with the intervention or assistance or interface of depository participant. Next, corporate actions. Corporate action, the word corporate action means corporate benefits like bonus shares, dividend, right issue, where the corporate takes actions to give something. Okay, so dividend, shares, benefits, right issue are all called as corporate actions. How would Mr. X get bonus shares if he holds shares in Demat form? Very simple. The company issues the shares to depository, and in the books of the depository, I am the beneficial owner. Okay. The concerned company obtains the details of the beneficiary holders from NSDL and CDSL. The number of shares are credited to the Demat account of a Demat account by the company or its RTA. So bonus shares are directly credited into my account. Now this is a very interesting question. Depository to identify indemnify loss in certain cases. If imagine there is a loss to investor due to negligence of DP. Okay, who is liable? Who is liable to pay compensation? I want you all to put in the chat box whether we will hold the DP liable or depository liable. Mistake is done by whom? Loss is caused by whom? Loss to investor due to negligence of DP. Who will pay compensation? Quickly, I want you to put in the chat box. Who will pay compensation? DP or depository? Very good. So this is the rules of agency will apply, and the principal, that is the depository, will be held liable. See here. Any loss caused to the beneficial owner due to negligence of depository or participant, okay, would be indemnified by the depository. The depository can later recover the same from the depository participant. Then comes the Depository Act 1996. From here I will tell you what is important. Okay, so now your Depository Act has 5 chapters. The objective of this act, okay, you can anytime write the objectives of the act, is to, why was Depository Act made? To establish depositories, to dematerialize shares, to make securities fungible and easily transferable, and make public company shares more freely transferable. These were the objectives of the Depository Act 1996. Commencement of business by depositories. Okay, let's see. Now all this is not important. I'll tell you what is important. Commencement of business means what? Depository, that is your NSDL and CDSL, can they just start the business, or they have to take approval? They have to take some registration. Obviously, what is the full form deposit? SEBI laws. SEBI is the regulator. So section 3 says that no depository shall act as a depository unless it obtains a commencement of business from SEBI. Okay, and SEBI will see whether they have proper additional safeguards or no. No certificate shall be refused unless the depository has been given a opportunity of being heard. Eligibility condition for depository services, if you want to become like NSDL, CDSL. So what all is required? A net worth of 100 crores. You should form a company. Okay, you should be registered with SEBI. You have to has framed bylaws with the previous approval of SEBI. You made the bylaws. You have adequate systems, safeguards to prevent manipulation. Okay, and you comply with the SEBI Act 1993, and then you will be eligible to give depository services. Next, there will be an agreement. The depository will have to enter an agreement with the DP, that is a depository participant, to enter this entire thing. Now, moving forward, all this is not that important. Fungibility we did. Section 9, very, very important. Then pledging of shares. So this is also permitted. You can pledge your shares. So if I have demat shares, okay, just like how I can keep physical share certificates as security to take loans, I can even take online shares, and I can inform the bank that I have so many online shares. Give me a loan against that. The bank will inform the company that he has demat shares. Don't transfer his shares to anyone else. I have given them a loan. So that is also permitted. Now, powers of SEBI, very simple. You can just see the headings, not that important. SEBI has the power to conduct inquiry, okay, on any DP, depository, beneficial owner. They can authorize any person to do inspection. SEBI will have a power to give directions, and they also have a power to make any kind of regulations, which they have made DP regulations. Okay. Now from exam point of view, this is what is important, and a little now they will talk about the audit. Two important things are there in this entire chapter. You should know what is fungibility, what is immobilization, what is depository, the entire structure, and the audit part. Okay, many students don't know the audit part and they move ahead, whereas it is very important, okay, to know. And that is it. Once we are done with the 3 kinds of audit, you are done and we can move ahead and the chapter also gets over. 3 important audits. There is concurrent audit, internal audit, and so let's start. Okay, first, very simple and very important. Okay, audit under Depository Regulations 2018. So this is important. Now what do they talk about? Whose audit are you going to do? What do you mean by the term audit? Audit means to check, verify, scrutinize, examine. Okay, now what are we going to examine? So Regulation 76 of the DP Act provides that every issuer, that is every company, shall submit an audit report on quarterly basis to the concerned stock exchange by a CSEET for the purpose of reconciliation of the total issued capital, listed capital held by the depository, the details of the changes in the share capital, and the in principle approval obtained by the issuer from all the stock exchanges where they are listed for such further issue. Now, what is Regulation 76 talking? It is about the company, okay, any issuer will have to submit an audit report, and this audit report will be quarterly compliance. Every 3 months this compliance has to be done, and it is to be done by the auditors who could be a CS or a CA. Now what is this audit is given here for the purpose of what is it? So it is about reconciliation. Now what do you mean by reconcile? Reconcile in simple words means to tally. So we will see that in books of, we will tally the shares, holdings, issued capital, subscribed capital, etc., and we will compare with what the issuer is holding in their books and what is the depository holding in their books. Okay, so let's understand what it is. Have you heard of bank reconciliation statement? What we used to do in BRS, I wrote a check. So in my book, I would write it that I have debited from my account, but I gave the check. So I will make an entry in my book. That other person will, when he will get later, he will put a debit in that, this, he will record this transaction. So there is going to be a time gap. So every 3 months they are saying reconcile. Every 3 months they are saying tally. What is a shareholding of the issued capital, subscribed capital, paid up capital in the records of issuer, that is the company's record, and the depository's records will be tallied. So they make a Excel sheet. In the Excel sheet they write these are the shareholders. Then we see whether the depository also has, because see what will happen when we are selling, depositories in books will have faster entry than the issuer's entry. Means I buy, sell. So depository will have records first, then it will get updated in the issuer's book. So every 3 months they have to sit back and tally. Clear till here? So this Regulation 76 is nothing but a reconciliation audit. It is a reconciliation audit. No, penalties are not important for this chapter. Now next is audit report is required to be given a updated status of the register of members. how many register of members are there of the issuer, and confirm that whether that has been dematerialized within 21 days from the date of request by the issuer. Okay, so if the issuer has said that this shares has to be dematerialized, so within 21 days all of that has to be done. Now coming to the next one, internal audit. So we did regulation 76 audit, that is a reconciliation audit. Now we will be doing audit, but now see of whom we are doing it. Here we are doing internal audit of depository participants of DP. That you were saying Zerodha, some were saying Angel Broking, some were saying HDFC Securities, ICICI Securities. So there is going to be an internal audit of DP. Now who will do internal audit? NSDL has said that company secretary can do an internal audit. CDSL in their letter and their bylaws have also said that the company secretary is a competent professional to do an internal audit. In internal audit, what you will check? As an internal auditor, now company secretary, you will be an internal auditor. What all you will check? So I will check whether the the transactions are done properly, dematerialized forms have been done in how much time, rematerialized request has been done or no, market trades were done correctly or no, transfer was done on time, transmission was done on time. Okay, any kind of investor complaints, what was the status? Okay, we will see whether there is a proper reporting to the investor or no. So let's read. Okay, so this is important. Both these audits are done by company secretaries. So two depositories, NSDL and CDSL, have allowed company secretaries to undertake internal audit of the operations of DP. Now every participant shall ensure that an internal audit of its depository operations is conducted at an interval not more than 6 months. Okay, so within six months you have to keep doing. So it's a half yearly audit. It is a half yearly audit. See, every participant, so NSDL is saying that every DP shall ensure that an internal audit of the depository's operations is conducted at an interval not greater, means within six months audit should be done, and it shall be furnished to the depository. Clear? Same for CDSL. Then you will see what all, if any shares have been kept as security, that is whether there was freezing of any account. Okay, so all these aspects you will see, the code of conduct, etc. will be seen. Now comes concurrent audit. Very, very important, concurrent audit. Okay, so we have done RECO audit, we have done, see, audit we have done, audit was done of reconciliation audit, that was regulation 76. Then we did internal audit of DP. This is another type of audit. And the third is your concurrent audit. Clear till here? So in your DP depository chapter, what I discussed earlier, and this audits part is important because this audit part students find it tough, so they ask in the exam. Okay, now coming to concurrent audit. So very, very simple. Let's understand what is a concurrent audit. To understand what is a concurrent audit, you need to understand something called as a delivery instruction slip. You have to understand what is the delivery instruction slip or DIS. Clear till here? What are we trying to understand? What is a delivery instruction slip? So it is an audit of the DIS. So it is a audit of the delivery instruction slip. Let's understand what it is. First, DIS, understand what it is. Now, whenever you have online shares, whenever you have electronic shares, okay, what happens? You can trade directly on brokers platform, yes or no? You can directly trade on the brokers platform. You will go to your app, buy, sell, you can do, game over, right? But there's another form of electronic trading. What happens is, old people like my mom, like your parents, they have shares in dematerialized form, but they don't have all this knowledge of platform. They don't have knowledge of this portal. So what they do, they call their broker and they give them instruction to trade. Have you seen Wolf of the Wall Street? How they are continuously taking orders. So what you can do, you're not doing directly on the broker's platform, you are calling the broker. So through the broker, you are trading. Concept clear? Now, who is going to do the trade for you? The punching of the order will be done by the broker. He is giving you that service. Okay? When I trade, I directly buy, sell. I don't talk to the broker. But my mom, she calls the broker. She calls the broker because she doesn't understand online. So she calls the broker and then tells the broker that, listen, buy so many shares, sell so many shares. So he does it. Later, my mom or any investor who is doing through the broker, later they will tell the broker that I did not tell you, you did wrong. Possible. So what happens is, there will be a delivery instruction slip. There will be a delivery instruction slip where every time I tell the broker to buy, sell, I will tear the delivery instruction slip. One thing, it is like a passbook. How you have a passbook? You remove, you give it, and then you give the instruction and document to the broker. So whenever the broker has traded on behalf of you, he should have an instruction slip. So as an auditor, I will tell that, listen, you sold XYZ shares. What is the proof? That investor told you. Show me the DIS. Show me the delivery instruction slip. So normally DIS slip can be given or it can be demanded from the broker. They will give you an empty booklet. In the booklet, you will say that on date, broker sells so many shares. And then you give it to the broker, then the broker can trade. Clear till here? So this audit is about that slip. The concurrent audit is entirely about how many slips were issued. Then if you have traded, how many slips have you received from the investor? How many slips are pending? These slip numbers, just like your check numbers, they have certain numbers also. So they will say, where is slip number 2? So a checking is done on the DP. So NSDL, okay, through its brokers provides for concurrent audit of DP. Now, the DP has been advised to appoint a CA or CS. The moment CS are there, so it is very, very important to know this chapter properly. Okay. So you will verify. However, the participant may entrust the concurrent audit to internal auditors to verify all the documents, etc. So let's see what all will be checked. So I told you it is all about DIS, delivery instruction slips. So delivery instruction slip may you will check the procedure followed by DP for issuance, for what controls do they have, what records they are maintaining, then how do they issue, you will check first. Then you will verify date and time and stamping on instruction slip. So we write the date, time, and then we give it to the broker in writing. Okay, blocking of slips which have been executed by them directly or which has been lost, stolen. Two-step verification was done if it is more than 5 lakh rupees. Instruction received for dormant accounts. If we receive an instruction from an account which was inactive, so we all have to check. Clear till here? So the concurrent auditor should audit in respect of all the accounts opened, the DIS issued, the controls on DIS, etc. on everyday basis. So that is it. Any deviation from the standards or the procedures on how to deal or what control should be taken will be checked. Now, role of company secretary, extremely important. Okay, so this is super important. In this entire chapter, audits, all those three audits, RICO audit, that is Regulation 79 audit, your internal audit and your concurrent audit, all three are important, and the role of CS is very important. Now, as a company secretary, I can appear in and legally represent my company. It has been stated that before SEBI, a company secretary can approach the security exchange as a lawyer and represent his client. That is why it is called as legal represent. I can legally represent my client. I can do internal audit of DP. I can do reconciliation. We just discussed RICO audit. That's your Regulation 76. Concurrent audit also we've seen, which is a audit of the delivery instruction slips. Okay, and that is it. I have covered the entire chapter. So for you, this one tension is over. Okay, I've covered all of this with the exam question and what can be asked in your exam as well. Now we'll go to another chapter. I have all these chapters. I'll just look at your request. Which chapters do you all want? All the chapters notes I have made, and we have all the colored notes. So not an issue. LODR I'll start a little later. I want to finish one more Chotu chapter. Any request? Yeah. Okay, great. So now should I start? Let's with insider trading and a real quick concept of insider trading. Yes or no? Which chapter do you all want? Please put in the chat box. I will read it. I am going to take LODR towards the end. Okay, chapter 17. Anything else you all want? That is, I hope you're not talking about the practical sums, because that is what after 16 that we put practical question. Any other chapter you all want, or I will pick up one of my chapters and complete it. Planning to take up insider trading. Okay, great. Buyback. Buyback also I'm not taken. Yeah. Okay. So let's start with insider trading. Chapter 16. Remember, I have taken in the previous marathon. You can complete. Whatever I've taken, I complete in depth. Okay, so that nothing comes outside of it. So in the previous marathon, it's there in our YouTube channel. Just go ahead. You see in the marathon, I have covered a rapid revision of chapter 16. The entire chapter will be done. I am covering chapters now which I have not covered earlier. So I will be starting with insider trading in one go and I will complete. Okay. Till then, those who have not liked the video, please like the video. Okay, I like to see the likes increasing after I say like the video. Okay, so thank you. So I think everyone has already liked it. Sure. Thank you. Now let's start with insider trading. In insider trading, there is an amendment. Okay, there are one small little teeny mini amendment. I'll take you through that as well. So insider trading also one chapter I will start and I will complete it. Keep a book, pen, module ready with you. Okay, so we'll just take a short breather and we will return back at 2:15 and I will complete it. Okay, so 15 minutes breather I need. I've spoken for 1 hour continuously. So again 2:15, oh sorry, 1:15 p.m. we return. Okay, 1:15 p.m. we resume. Then again I'll start and complete entire insider trading with you all with the amendment. Okay, so be online just 15 minutes. Till then you all can revise that depository chapter which is there. Okay, that's it. Hi guys, so am I audible to you all? Okay, great. So I think someone has said that they also take CIS and this particular chapter. So okay, I'll check on that as well. Ombudsman and CIS. Now I'll be covering insider trading with me. Okay. So let's begin with the chapter. Just before I start, I require a thumbs up from y'all whether I'm audible to y'all or no. Okay, a small thumbs up if I'm audible to y'all or no. Okay, in the chat box, please mention. Okay, great. So let's start with insider trading. Okay, great. Now, what do you mean by insider trading? First, insider trading means whenever the insiders of the company start trading in the company's shares. Now, insiders are those persons who have access to UPSI, who have access to undisclosed price sensitive information, unpublished price sensitive information. So when the insiders who already know what is the secret information, unpublished information, they trade in the shares, that is called as insider trading. Now in India, insider trading is prohibited. You cannot trade, and the reason is very simple. Okay, and if you want to see, there I've taken many examples also where Rakesh Junjanwala also in the Aptech case, he had inside information and still he traded. So he was he settled the matter for insider trading. So he was also allegations were there on him as well, where he then settled the matter. Now what do you mean by insider trading? Insider trading means whenever the insiders of the company trade with respect to the securities of the company, that is called as insider trading. Now why it is prohibited? Reason is because they have access, they have privileged information, they like your directors, your key managerial persons, your company secretaries, your chartered accountants, they all are treated as insiders of the company. Okay, insider is any person who have access to undisclosed price sensitive information. On basis of this information, since it is not yet made public, they have an advantage, and when they make profit, okay, on these shares or they trade in these shares, it is called as insider trading. It is banned. Now question is why, what is the rationale or the purpose behind prohibiting insider trading? If I ask you, first, insiders have advantage, have access to price sensitive information. So because of that, they are in a better position as compared to others. So they really know what the company share performance will be in future. For example, if the company has a balance sheet net loss, now before disclosing it to public, they will sell their own shares and dump it on others and exit. So then they say, no, that is not right. The insiders cannot dump these shares, sell these shares on innocent investors who didn't have access to this sensitive information. So therefore we say that insiders should not trade. Second reason is it will lead to loss of investor confidence. Because investors will say that why do we do all this analysis, fundamental analysis, technical analysis? The entire game is going to be in hands of insiders only then. So it will lead, the integrity of the market will be affected. Third logic is if we allow insider trading, it will disrupt the level playing field. Level playing field means what? Everybody is not equal. Here the insiders will be at advantage and the public will be at disadvantage. So that will not be allowed. When we disallow the insiders who know what's going to happen from trading, then we come on level playing field. Then the investors, then the public will be encouraged to trade in the market because they know that it will not be rigged, manipulated by the insiders. So thus, for smooth functioning of the securities market and to preserve the quality and integrity of the insider trading needs to be prohibited. Now, if you go to see the legislative history, how did the insider trading come into play? So it all started in United States of America, was the first country to make formally a law on insider trading. Then from India point of view, in India, if we go to see, we can relate in 1940 with the setting up of Thomas Committee in 1948. So the first committee in India set up for insider trading is Thomas Committee. Okay. Then thereafter, the insider trading were incorporated under the Companies Act under section 307-308. This is of 1956 Act. Okay, which required certain disclosures by directors and managers. Due to inadequacies in enforcement in 1956, then the Sachar Committee, Patel Committee, Abid Hussain Committee proposed a separate law on insider trading to come in. Okay, so 3 committees, they came and they said, let's all make a separate law. And today we have the SEBI PIT regulations, Prohibition of Insider Trading Regulations 2015, okay, which was further amended in 2021 and few changes in 2022 as well. So we will be doing all of that. Now, whenever you write about insider trading, because it's a short exam question, okay, so what will you write about? Okay, first you can write the basic that the SEBI insider trading regulations 2015 were based on the recommendation of Sodhi Committee, okay, set up under the chairmanship of N.K. Sodhi, the Chief Justice of High Court of Kerala and Karnataka and former presiding officer of SAT. So under his chairmanship, the PIT regulations was passed. Your PIT is your Prevention of Insider Trading Regulations. Now, let's look at the legislative framework of PIT regulation. Legislative framework means how many chapters, how many regulations, etc. are there. So first, PIT regulations has how many chapters? Okay, so your question in exam will 100% come from here only. So at least you can quote. Now from here, chapter 1 talks about preliminary. Chapter 2 talks about restriction of communication. Chapter 3 talks about disclosures. Chapter 4 talks about code of fair disclosures. Chapter 5 talks about miscellaneous matters. And then you have Schedule A and Schedule B. Now obviously from here, the most important is your chapter 2. The most important is your chapter 2, regulation 3, 4 and 5. Chapter 3, 4 and 5. Clear? Now, let's start with the regulations. First is, who is an insider? If I ask you, so we definitely will be mentioning what is, when you're talking about insider trading, so we should know who do you mean by insider. So insider definition is given under regulation 2 clause G. It means insider means any person who has access to UPSI. Any person who has access to undisclosed price sensitive information. So tell me one thing, if in the company, the CEO of the company has some unpublished price sensitive information. Now what do you mean by price sensitive information? It means that if this information, if published, will affect the market price of the company. For example, where the company has got a big major contract. So the CEO knows that moment if I disclose this in the market, the share price will shoot. So this information will become the undisclosed price sensitive information. So any person who has access to UPSI. And what do UPSI mean? This information, if published, will affect the market price of the company. And second category, they have said connected person. So connected person, even if they don't have undisclosed price sensitive information, because they are connected, they will be called as insiders of the company. Now what does this mean? First we will see what is insider. Two categories: connected person, and the second is person who has access to UPSI. Now connected person means what? What do you mean by connected person? Very simple. They were connected to the company in the past 6 months. So connected person means a person during the 6 months prior associated with the company of the concerned act has been associated with the company in the capacity of an officer, employment relationship, director, holding any position as a professional or business relationship. Okay, that allows such person access to undisclosed price sensitive information. Means, let's say if there was a act, if there was an insider trading act, or there was a big trade here and it has come under SEBI radar. SEBI is checking this trade. So any person who was 6 months prior associated with the company, 6 months prior, will be treated as a connected person. Now coming to deemed connected person. See, connected to, we understand that because of director is connected, KMP is connected, employees are connected. Deemed connected are the relatives also connected. See, I don't trade, but I make my wife trade. So we are deemed by default, we are treated as, by default, we will be treated as connected person. Burden of proof that we did not trade, we did not have this discussion will be on us. Because by default, we will be connected, we will be treated as working together. So if my wife trades and she makes some huge gain, and I had some undisclosed price sensitive information, मेरे पास में कुछ undisclosed price sensitive information था, I had some sensitive information, and my wife went and traded and got profit, and I say no, I never spoke to my wife only. They say no, by default you all both are connected, you all both are connected persons, deemed connected persons. Then I have to prove in court why. So the burden of proof will be on the connected person to say that they didn't have access to the undisclosed price sensitive information. Next is holding subsidiary, associate company, they are all connected. Next is any intermediary of the company like an employee, deemed connected, or investment company and its directors, an official person working in the BSE, obviously they also get price sensitive information. Member of the board of directors of a trust, mutual fund, member, the director and the public financial institution, then the officer of SEBI, banker of the company, any a company and its directors, firm and its partners, HUF and Karta. Okay, they are all deemed to be connected. Now, next is what do you mean by undisclosed price sensitive information? So any information which can affect the price of the company, and then give examples: M&A, financial results, dividend, change in the capital structure of the company, changes in the KMPs, any material company are called as undisclosed price sensitive information. Now let's see chapter 2. I told you chapter 2 is important, regulation 3, 4, 5. Okay, now we are seeing regulation 3, 4 and 5. Very, very important. Let's see. Now, restriction on communication and trading by insiders. Now please take a book and pen and write with me. Okay. Regulation 3, what does it say? If, okay, now I want all of you all to put in the chat box. Okay. Use your fingers and type. If there is an insider of the company, they share information, they share undisclosed price sensitive information with an outsider. Okay. Now you all have to tell me who is right, who is wrong. Okay. Outsider. Who is wrong? Who is wrong? Insider gave undisclosed price sensitive information to outsider. Who is wrong? Whether the insider is wrong or the outsider is wrong, or both are wrong? Quickly. Or both are wrong. Tell me who's wrong. Insider is sharing the outside news with the outsiders. Who's wrong? So the answer is both are wrong. Regulation 3 says that the insiders shall not share and outsiders shall not receive. So both are wrong. See, Regulation 3 says that no insider shall communicate and no person shall procure from any insider. So both are wrong. Any undisclosed price sensitive information. Now, Regulation 3 sub rule 3. Okay. Now we're seeing 3.3. They say the provisions above when we can share undisclosed price sensitive information, when we won't be wrong. So insider can share some undisclosed price sensitive information with outsider when it is correct. Certain cases when it is allowed. Correct, or I could say allowed. Now when they are allowed. First, when there is an open offer. Second, it does not involve an open offer, but it is in the best interest of the company, the board of directors feel. Two points they have given. So let's understand what are these 2 points. Now let's say there is a takeover happening. Takeover that is going on. The target company is there. Target company, and then you have the acquirer. Now normally the target company's BOD want that the company should be taken over because we want to sell off the shares, etc. And the acquirer is nothing but an investor. They want to acquire or they want to invest into the company. Okay, they want to buy out the shares. So the target company is allowed to share undisclosed price sensitive information. Why? Because how will the investor decide to buy? They will require some internal information. How will you invest in a company? Whenever you go to buy in a shop, you check all the details, you ask questions, you ask for information. Same way when these investors are there, they are coming. So there is a takeover, there is an open offer. Okay, open offer there is. The investor wants to give an open offer to the target company that I'll buy the shares. Now what price, etc. First I'll have to know the details of the company, due diligence on the company. So they will have to share information. Now whenever they share this information, they will enter into a NDA, non-disclosure agreement, or a confidentiality clause. A confidentiality clause will be entered so that the acquirer will not share this information further. So one is when there is a takeover involved, open offer, and second, there is not a takeover, but we feel that there is a party coming who wants to invest in the company and it makes sense to share that information. Sometimes merger is there. Okay. Now one company wants to know the other company's details, then only we will merge. So all this is allowed. Then comes, they will have to enter into NDAs and confidentiality clauses that listen, we are giving undisclosed, further don't give it to anyone. Now this 5th point has been added, okay, and it is important. Okay, it has been added through the amendment and it is important. Now what is happening? It is said that you have to maintain a database or in the digital form. The board of directors of listed entities are required to maintain a database in digital form and shall contain the following information. What all information will be covered? So basically in computer they will have to save the persons with whom UPSI has been shared, the PAN number of the person. So with PAN we come to know their if their income tax, if they made some major profits, etc. So we will be able to track that, and nature of undisclosed price sensitive information. So let's take an example. If there is a company, they want to share the undisclosed price sensitive information with the auditors, with the audit firm, So obviously they are saying that you will first enter into NDA, non-disclosure agreement. Okay, further you will not do. Then from the audit firm, they will have to maintain the company will maintain a digital record or register of the PAN numbers, etc., to whom they are sharing, what are their names, all those details will have to be maintained. Now this digital record shall be maintained internally and will be prohibited to outsource this maintenance of database. Company should maintain it themselves. The structured digital data is to preserve for 8 years. So 8 years they have to preserve this. Okay. Now we've done with regulation number 3. Now we are doing regulation number 4, trading when in possession of UPSI. Now when I can trade, when I am in possession of UPSI, still I can trade. So these are the exceptions to insider trading. These are called as exceptions to insider trading. That means the insiders can trade in these regulation 4. So the insiders can trade. Now when and why? First, a insider shall not trade in securities when in possession of undisclosed price sensitive information is the normal general rule. However, if the insider proves his innocence by demonstrating any of the following. So if the insider proves any of this, he will be safe. No litigation, no case, nothing will be done. It is absolutely correct. That is very, very simple. 3 examples they have given you: inter se, block transfer, regulatory, and ESOPs. They have given you 4 conditions. These are when insiders can trade. When insiders can trade. First, what was the first one? If there is a inter se transfer among promoters. Second, if there is a block deal. There is a block deal or a bulk deal. Third, they have said, and fourth, when can insiders trade? Let's see, they've given you 2 more points. One is ESOPs and the other one is law, and as per some statutory obligation, and the other one is ESOPs, employee stock option scheme. So here in these 4 cases, the insider can trade even when in possession of undisclosed price sensitive information. Let's see each case clearly. Okay. First, what is the logic of insider trading? Understand that. Logic is we should not dump the shares on innocent person. I should not dump, like see, the promoters have inside knowledge. They know that the shares price is going to crash. For example, agar they know that gir jayega market, they know that the market will fall. They will sell it to the public, offload the shares on public, and then the market price will fall. So the public will be at loss. But if I give it from one promoter to another promoter, so it is among us only, loss will be done to him only. So there is no loss to public. So therefore inter se transfer among the promoters is allowed. Promoter is holding 25 shares, he is selling not to public, he is selling to another person. So loss will be among there, we don't care. Next is bulk deal. Bulk deal and block deal, again what happens online, big players can sell in bulk. There they should know the other side. So here also it is not sold to public, it is sold to another transfer of shares to another big player. So both players are there, public will not be affected, allowed. Third is statutory condition. If government has put some law, obligation, requirement, so then you can trade. And last is ESOP. Now ESOPs happen automatically. After 3 years of working with the company, the shares will come with me. So I have bought the shares. Automatically ESOP got, all these 4 are allowed when the insiders can get shares even when he is in possession of undisclosed price sensitive information. So let's see. First is interstate transfer among promoters. Promoters are trading among them, doesn't affect public, absolutely fine. Block deal, where both the parties have made conscious informed decisions, there is no breach of regulation 3, absolutely fine. Third is pursuant to a regulatory or a statutory deal, and which is bona fide, in good faith, or okay, and in exercise of ESOPs, so absolutely fine. Now in case of non-individual insiders, now what does it mean? Okay, let's see. Non-individual means company. Now two companies are trading, absolutely fine. See, the individuals who were in possession of the UPSI were different from the individuals taking the trade decisions, and such decision making individuals were not in possession of the price sensitive information when they took the decision, and appropriate adequate measures have been put, and nothing has been violated, and there is no evidence of any arrangement being breached. What does this mean? Let's take an example. Okay, there is company ABC and they got some information about company XYZ. Okay, or let's say they shared some undisclosed price sensitive information to company XYZ. Till here it is clear. Company A shared their personal details with company Y. Why? Because company Y must be going to invest. So they shared. Now here there were many directors. Not every director is going to have knowledge. So Mr. X, Mr. Y and Mr. Z. So these two had knowledge of undisclosed price sensitive information. Clear? And company Y, there was another person who was working, because companies are very big. If you see Reliance Industries, every branch there are more people, every location they are there, every country there are there. So it is possible that this person, Mr. Z, has no knowledge of undisclosed price sensitive information, and this guy traded with the company shares. Now what is the logic? See, understand. He must be living in Tamil Nadu. He will be living in Tamil Nadu, and these two were in the Mumbai branch. Now price sensitive information was shared in the Mumbai branch. So this guy doesn't have undisclosed price sensitive information. He must have innocently bought the shares, traded. If it is proved that he didn't have the knowledge, the persons who were taking the trades were different from those who had the knowledge, then it will be allowed. Clear till here? So what is the logic? That those persons who were in possession of undisclosed were different from those who took the trading decisions. Okay. Now if it was done pursuant to trading plan given in regulation number 5, which we will see. If all this is there, then the person will not be held liable. Now let's see what are these trading plans. We did regulation number 3, we did regulation number 4, and now we're doing regulation number 5. Very important. They are called as trading plans. Now understand the logic of trading plan. So regulation 5 talks about trading plan. Trading plan is made specially for insiders. It is for insiders. Now take an example of Mukesh Ambani. Now Mukesh Ambani, he is perpetually, forever, every moment going to have undisclosed price sensitive information. Mukesh Ambani will always, in his entire lifetime, he is going to have access to UPSI. So does that mean that Mukesh Ambani can never sell or buy? Because whenever he will do, he will have undisclosed price sensitive information. So Mukesh Ambani and promoters will say, how will we sell the company? How will we share the shares? We have so many shares in the company. How do we trade if we want to do? So we say, okay, fine. What you do is you give us a trade plan. you give us a trading plan. What do you want to do? It will be there for 1 year. 1 year trade plan give. It will be effective with effect from 6 months onwards. After 6 months it will be effective. Means if you want to trade, you can't trade today. After 6 months you can trade. Then trading will not be allowed in it will not be allowed in sensitive time periods. Like when the financial results are going to be disclosed, all those time period where the trading window is closed, you cannot trade. Okay, then they will say, okay, fine, what other rules are there? So there will be only one plan. You cannot have overlapping plans, 2 or more plans for the same time period. Second is, once you give the plan, then no matter what happens, you cannot change. You cannot change your plan. So this way Mukesh Ambani will already be telling that what he is going to do in 2025. 2024 he will tell in 2023 only when all he is going to trade. So then we will believe that now he can't have a future, so much undisclosed price sensitive information. This trading plan will be disclosed to the public. So public will also can decide that Mukesh Ambani is going to sell, so we also want to sell, etc. So trading plans are allowed for insiders to trade, but they have to give the requisite disclosures. Okay, so mark this as super important. It is a new concept which has been brought in, which was not there in the previous regulations. Insiders shall have an option to formulate a trading plan, and all of this will be given to CS, compliance officer. Okay, and all of this will be disclosed. Trading plan shall be for 6 months, and it cannot commence within 6 months. It will commence only after 6 months. So I cannot say what I'm going to trade tomorrow or day after 6 months and for 1 year. So I can tell that the trade plan is from 2024 January till December, 1 year trade plan. This is it. So I will see that it is after 6 months. Yes, it is after 6 months. So it can be approved by the compliance officer. Market as super important. Very, very important trade plans. Okay. Now, an insider shall be entitled to formulate a trading plan and present it to the compliance officer for approval. Trading plan shall not commence before 6 months. Okay, and not entail for a period between the 20th day prior to the last day of the financial year. Market is important. So no, it shall not entail, it shall not contain trading for a period between 20th day prior to the last day of the financial year. So this is the financial year end. So from here till the past 20 days, no trading. So we can call it as the trading period is closed. Trading period closed for insiders. Why? Because this time period when the financial year ends, there is a lot of financial results are going to be disclosed. So it's a very sensitive time period. Then it shall not be less than 12 months. It shall not overlap. Okay, and they shall give the full details of how many trades, what is the value, everything. And it shall not contain any market abuse. The compliance officer shall review the plan. Trading plan once done is irrevocable and have to mandatorily implement, and you will also have to inform the stock exchange and it will be published. Then comes to regulation number 6, that is your disclosures by insiders. We'll see disclosures by insiders and their relatives. Now, regulation number 7 talks about initial disclosures. First category is when from the regulation coming into effect. So moment the regulation, PIT regulation was formed, then every director shall disclose, promoter shall disclose within 30 days of these regulations to the company. Okay, his holdings. Then from appointment, moment a KMP or a director is appointed, every person on his appointment has to disclose his holdings within 7 days of the appointment. So from within 7 days of appointment he has to disclose. Then continual disclosures. Continual disclosure is to be done every year. Every year. So for promoters, directors dealing in securities of 10 lakhs or more. So every promoter or employee shall disclose to the company the number of securities held within 2 working days. Okay, if the aggregate value of the trades are in excess of 10 lakh rupees as may be prescribed. So if the promoters or the directors are dealing more than 10 lakh rupees in one go or in parts in a year, they have to make a relevant disclosures. You make it to the company will inform to the stock exchange. Then comes reward to informant. So this is newly brought in. Let's understand. Okay, what is rewards to informants? Now, what happens is, this is the public, and this is SEBI, the Security Exchange Board of India. Normally what happens, if the public is there and you have, some people, they inform and they tell, jasoos, spy, etc. They go and they tell SEBI that what wrong is going on. So this guy can be the informant. Now if this guy informs, now what does he informs about? About any scam that is going on. And if SEBI finds that this is original information that they didn't know, and the informant gave correct information and it helps recover money, stolen property, fraud property, scammed money, okay, helps us put the person behind jail, then SEBI will reward this person, the informant also. Now earlier it was given 10% of the penalty amount. What is levied will be given as reward, or earlier it was 1 crore, now it has become 10 crores, or 10 crore rupees can be given to the informant. Earlier it was 1 crore, now it is 10 crores. So let's see what is this informant rewards. So SEBI continuously has hiked this reward part for the investors. So chapter 3A has been added for incentive and reward for informants who submits to SEBI a voluntary information disclosure. So voluntarily they go to SEBI and they inform regarding any alleged violation of an insider trading law. Okay, then SEBI will then we'll come to it. Yeah. So these are your regulation. Okay, the reward is here. It has now become 10 crores. Definition, it should be original information. Okay, only on original information you will get a reward. Now original information means what? It was not published, not known anywhere, and I think they can ask you. Now also this informant, if he wants, he can say that hide my name, I don't want to be disclosed, or if you do this, don't disclose this document, the accused will come to know that I gave the information. Okay, so all this has to be hidden. Okay, and proper mechanism should be done that the informant is protected, his identity is protected. So informant means a person who voluntarily submits a voluntary information disclosure of a alleged insider trading law. If he has given irrelevant information or frivolous or fake information just to waste our time, then he can be held liable, and informant will also get punishment. If he has given irrelevant information, vexatious means fraudulent, ill-informed information, etc. Okay. Monetary sanction means what is the penalty SEBI is going to put. These were the definition. They can ask you in the exam, what do you mean by original information under insider trading law? Original means what? He is given brand new information. That means derived from independent knowledge and analysis of the information. SEBI got some knowledge which was in the informant gave independent knowledge. It was not known to SEBI before and it is sufficiently specific, credible and timely to commence examination, to assist in an ongoing case, to open or reopen any investigation, all of that. Okay, so market is important and it is not irrelevant, vexatious or frivolous. So how does it work? You give a voluntary disclosure and they can go and check. Okay. So this is the amendment. Okay. Now pay attention to the amendment. It is important. Now, upon the collection and substantial recovery of the monetary sanctions. Now, moment SEBI, because of the informant, they came to know who did the wrong and they collected, they could make a substantial recovery. Okay. On basis of the SEBI sole discretion, SEBI will declare the informant eligible for reward. So on SEBI's option, they will give him reward. However, the amount shall be 10% of the monetary sanction or shall not exceed 1 crore rupees as SEBI may specify. Shall be maximum of this 1 crore has now been increased to 10 crores. Okay, so very important to note this. So what is the reward? Will be 10% of sanction or 10 crores, whichever is lower. So it will be maximum of 10% of this or 10 crores, whichever is lower. Okay. Now coming to application has to be given. That's it for this part. Now code of conduct. Now these are two simple things that we can quickly go through this. Code of conduct is divided in two parts, Schedule A and this is given in Schedule B. Code of fair disclosure is given, formulated by the board of directors of every listed company. It is given in Schedule A. Code of conduct is formulated by the board of directors, every listed company, market intermediaries and all the persons who are essentially in possession of UPSI, and it will be in Schedule B. Clear? First, Code of fair disclosure. Code of fair disclosure means what? The board of directors should as soon as possible make the disclosures of the undisclosed price sensitive information to public so that people can trade. How to do it is given in your Schedule A. Now, code of conduct when in possession of undisclosed price sensitive information. If you have UPSI, then how you should act. For example, company secretaries are in possession of UPSI. So what they can do, what they cannot do, what precaution they should take is given in your Schedule B. This is prepared with BOD and all other intermediaries as well. Okay, so you can read through few points. The code of fair disclosures. The board of directors of every company shall formulate and publish on its website the code of fair disclosures. Now the principles they will give you, each such code that they should inform the SEBI and the public immediately of any information. Schedule A gives you just basic principles. Okay, what does schedule give about? Principles. Now you'll see principles like prompt disclosure, okay, universal dissemination, give it to everyone, appoint a senior, okay, then appropriate and fair response to queries, use the best practices, okay, ensure that the information shares with the analyst and research personnel is not published undisclosed price sensitive information. So all general points you can take up. Now if you go to see code of conduct, this is given in your Schedule B. What they talks about, the board of directors and others will sit together and decide that who are in UPSI, how to deal with that. Okay, that is given in your Schedule B. Now this is important, Schedule B. Okay, they can ask you. First they are saying how will the board of directors prevent insider trading from happening? What do you think? What are the safeguards? Are all given here. Okay. So first is, you will appoint a compliance officer, company secretary, who will handle everything. Second, should I share undisclosed price sensitive information in the company to everybody? To the intern, to the supplier? We say no, what nonsense. Just give it on need to know basis. Only to those who are needed to know the information, please share that. Next is create Chinese wall policy. Chinese wall policy क्या है? Now, what do you mean by Chinese wall policy? Is that even inside the company, there should be something called as a Chinese wall within the company. Within the company, they have divided the people into two categories. One is insiders and one is outsiders. Within the company also, you think everybody has undisclosed prices and information? Answer is no. Within the company, those who have undisclosed price sensitive information, those who have within the company, are called as actual insiders of the company. Rest all, we can say that these are outsiders who are within the company. For example, the marketing head will not know what is happening in M&A. So though he is working within the company, he is an outsider. So what they are saying, you have to create proper walls. It could be physical wall, by having on a wall should be there, so that there is no leakage of information from year to year. This should not happen. Wall will prevent insiders from sharing that information or leaking that information to outsiders. The wall could be a virtual wall, okay, where we create policies for separation, etc. Or physical walls also, different rooms, different departments, different floors, etc. Okay, so Chinese wall policy, where price sensitive information are required to be disseminated on continuous basis to prevent misuse. It is always better to have internal areas and external areas separated. Internal areas within the company are those who have routine access to UPSI, and external areas in the company are such, could be separated and kept differently, like your sales team, marketing team, investment advisors, etc. Then they are saying the employees should follow the code of conduct. So code of conduct should be created and everyone should follow. Then the board of directors shall specify designated persons to be covered by the code. So then they will say that the senior management, who all will be coming under the code of conduct, especially for this. Second is, if disciplinary action should be taken, such as freezing the wages, suspension if they are violating insider trading norms. Then very, very, very important, market as super important, trading window. Okay, so it is super important. What do you mean by trading window? That is the time for trading. Okay, so it's the time for trading. So during that time you can trade. When I say normally, when price sensitive period is there, they close the trading window for the insiders, that the insiders cannot trade. See, the trading window shall be closed during sensitive time periods. Okay, they have also given that when it will reopen, that will also be given, and during that time everyone who is in this cannot deal. Then comes pre-clearance of trade. This is also very important. Pre-clearance means what? When insiders want to trade, they will have to go and get it pre-certified, pre-cleared, pre-approved from the compliance officer. So insiders will have to get the trades pre-approved before trading. Now see, what are all these logics? All of this we are giving so that insider trading cannot happen. Okay. Then they've given another thing, that regulation 9A, institutional mechanism for preventing insider trading. the CEO, managing director, shall put in place an effective and adequate internal control to ensure compliance with the requirements. Internal controls could be identifying who are the persons who are key, telling them to maintain confidentiality, okay, making them sign certain bonds, and periodical review of these procedures should be done. Now, they're also saying that the audit committee should, review this kind of policy. Then a whistleblower policy that is there, if you remember, in LODR as well as in company law, audit committee needs to be formed, and the whistleblower, that is policy should also be in place, that if anyone wants to complain, where and how they can go and complain. Okay, then comes the penal actions. Now penalties are important for this chapter. Okay, so mark it as important. Penal provisions. So you can go through the penalties and the role of CS. When you come to the role of CS, very important, very important. The full chapter you have to write down. Yeah, see, the company secretary is the compliance officer. So you as a CS, what all you will do? I will see that the trading window is closed. I will see that there is pre-clearance of trade. I will see that the code of conduct is followed. I will see that the regulation 3, 4, 5, 6, 7 is followed. I will, make minimum standards of disclosures, minimum code of conduct. Okay. Then I will, no trading should be done prior to 20 days prior to the closing of the period, and second trading day after the closure of the period. So market is important. So they are saying when the trading period will be closed. Then again, I will take the trading plans, remember, of the people I will maintain, who all are the who are key people who we should restrict from trading. Then you have to ensure when the trading window is closed, opened, etc. Okay, similar points. So place before the CEO, CFO on a monthly basis all the details of dealing with the securities by the designated firm. So simple points you can pull off, and I think we are done with the full chapter. Okay, now in the exam sometimes they ask you questions like this. Now what we will say, that in light of the insider trading, whether this is a violation or no. So how you'll write? See, the CEO of the company met with an accident and had been hospitalized. Whether it is price sensitive information or no, answer is no. Though the information relates to security, relates to the company, but is not related to the price of the security. Company is going to declare dividend or right issue in future. Answer is yes, it is price sensitive information. RBI has increased the repo rate. No, it is not. It is a publicly available information. So sometimes they ask you whether it is price sensitive or not. So with this, I have covered entire insider trading, if you go to see from your module, and the amendment also. Okay, so nothing else can come outside what I have stated for you. Okay, so I've covered this. Now I will just go up to the next topics. Okay, now I just see, sorry for the disturbance in running lecture. Can you please help me about EBCL marathon? Okay, Saurabh, just go on the YouTube channel and check the videos. I have taken a EBCL marathon already. Yesterday only we've taken. Okay, now Harisa, you have asked please cover 13 and 14 after this chapter. Okay, I will take your instructions. I will pick up one of the chapters, 13 and 14. Anything else that you all want? Which chapters have been taught till now? Okay, so you can check it. Anything else? Yeah. Okay. So I think many students are saying 13 and 14. Kavya has also said, Harisa has also said. Okay. So what we'll do is I will see which are those two chapters. Let me just check here. Which are those chapters? Okay. Let me just check. So you have mutual funds. LODR I will take last before wrapping up. I will take up LODR. I will give a good amount of break, lunch break, and then we will start with LODR. Just before that, LODR I will take for sure. Now from here you've said 12 and 13 or 13 and 14. Okay, 14 is ombudsman regulation. And which is 13? Is 13 this chapter? Sweat equity regulations. This, right? The sweat equity regulations and your share based employee benefits. Yes or no? This is your 13th chapter. This I have already covered in my marathon. If you go in SLCM marathon CS executive English, you will get this. The first chapter that I have covered in my marathon is the sweat equity regulations. Okay, so this will be completely done. Now I'll start after the break. I will start with, as you all have told me, I will start the 14th one, that is your ombudsman regulation. Clear till here? Ombudsman regulation I will start. Okay, collective investment scheme. Sorry. Okay. My bad. So you all are saying to start with CIS and this. Okay. Sorry. So got it. Thank you. So 2 chapters. So CIS, collective investment scheme, or the chapter 14, and the 13 is which one? Okay. 13 and 14 is ombudsman. Right? This is correct. So after the break, I'll take any one of these 2 topics. Okay. So we'll take a break. Okay, and after the break, I'll cover one of these topics. Let me see. Got it. Thank you so much, Sudhir and Harisa. I've understood. 13 is CIS and 14 is ombudsman. So either of this I will take up after the break. Okay. So I will take a break and we'll return back. I'll try finishing both also. It's a very small chapters. I'll give you a full brief up about this. Okay. So we return. Take collective investment scheme. Got it. Okay. Samruddhi. Okay. So we return at 3 p.m. We continue with these 2 chapters. Okay. So do hit the like button, inform your friends, tell your friends to attend the lecture as well. Okay. And do join the Telegram group and the WhatsApp groups. Especially I'm holding in lectures in English for all the students, especially in the South, who want lectures in English. They've always requesting me. So I'm holding these lectures. You all have to, your job is to go and get your friends who need these lectures and are finding these lectures. Okay. So after the break, I will start with either of these 2 topics. Okay, so am I audible to you all?
Yes, sir.
Am I audible to you all? Just please put in the chat box if you can hear me clearly. Okay, great. So we will be completing, I think it will take half an hour, 45 minutes, and we'll be done with this entire chapter. Okay, so we can quickly finish. Okay. So what you can do is I will start and I will complete the full chapter so you all can finish this entire chapter with me. I'll be covering all the past exam questions and I'll be also covering all the topics which come in the exam. Okay, so be with me for 40 minutes. This entire chapter is done from the module, from exam point of view, from your exam what questions will come, even that I will cover. Okay, along with the concept of CIS in very simple terms. Okay, so for those who have not yet liked the video, go ahead, hit the like button. For those who haven't, shared it with their friends, call their friends and inform them that lectures are going on to attend it. And now without further wasting time, let's begin with your lesson 13. Okay. Now we start with lesson 13, your collective investment schemes. Before we get into the chapter, it is very important to understand the CIS, what is CIS and the structure of CIS. Then it is a very simple chapter. First, collective investment schemes. So from the name itself, what do you think? There is a collective investment. So there is a CIS. What happens? There is the first thing called as pooling of funds. There is pooling of funds. That means various investors invest into the CIS. So there is going to be made investments from Mr. A, from Mr. B, from Mr. C, etc. So collectively people invest and this is the combined pool. This is the entire funds. From these funds there will be investments made. There will be investments done. Whatever return we get from the investment will then be distributed back to the investors in the form of return after taking the funds, whatever is there for the expenses of the CIS. Till here it is clear? Yes. Now CIS is also like a mutual fund where you take pooling of funds, collecting funds from investors and then investing it as per the investment objectives. 1. Mutual funds have a dedicated regulations. So anyone wants to set up a mutual fund will have to be registered as a mutual fund under the mutual fund regulation and then all the rules of mutual funds will apply. The same concept if someone wants to do CIS, collective investment schemes, they can even do that and get registered under CIS scheme. Now government has also said that any scheme of collecting pooling of funds which is of more than 100 crores and not registered under any other law, not registered with SEBI, will be deemed to be CIS, So what happens is if there is any scheme of pooling of funds of 1000 crores or more, if the CIS has a corpus funds of 1000 crores or more, it will deemed to be called as a CIS, and deemed CIS have to get registered under the CIS regulation and all the rules they have to follow. Now, in mutual funds, where do you invest? Where is the investments made? Can you put in the chat box? Where are investments of mutual funds made? Now, mutual funds normally invest in stock market, whereas CIS can invest other than stock markets also. They can invest in property, they can buy income generating property, they can buy houses, whatever rent comes can be flowed back to the investors. So CIS could be anything not restricted to stock market. Money is collected and investment can be done any place. Now, to this CIS scheme, a trust is made. Okay, a trust is made to collect the money. So the money is pooled in the form of trust. When I say trust, that means there would be trustees. The trustees will take care of the money, that it should be spent properly. They will look after the investment, where all it is going. Now, to launch schemes, various schemes, collecting money, etc., the trust or the CIS then launches a company. They launch, so the CIS, collective investment scheme, which is formed as a trust, will then incorporate a company to handle this. The name of this company is called as Collective Investment Management Company. Okay, CIMC. So this will be a company registered under Companies Act 2013, and the function of this company CIMC is to launch CIS scheme, CIS schemes. Till here it is absolutely clear what is a CIS. So CIS is pooling of funds and investing it. These are not mutual funds, because if they would be registered under mutual fund, they would be called as mutual funds. If there is any scheme which is not registered in any under SEBI laws, they are deemed to be CIS. Okay, so let's read what is the meaning of these schemes. Now, why did the government launch this? First, there were multiple scams. If you read the Sharda scam and if you see the Rose Fund scam, what they used to do, these were all called as Ponzi schemes. They were all called as Ponzi fake schemes. Now, what did the government do? The government said that any scheme which is collecting 100 crores or more and not regulated by any other law will be deemed to be CIS. Okay. The definition we will see what it is as per the law. Right now we are just understanding the concept. Now from here you can write this: collective investment scheme is a scheme that collects investment, that means pools money, and it is managed by CIMC. It is managed by a collective investment management company, and in the management company you will have directors, investment advisors, etc. Okay. Now I'm telling you what is important from exam point of view and what comes in the exam. Okay. First, important definitions, super important. Okay. They come in your exam also, and these are your past exam questions. Past exam question as well. Now what question do they ask in the exam? They ask in the exam, what is a CIS? Now I give you the general meaning. Now we will see as per law. We will see as per the laws. So collective investment scheme means any scheme or arrangement which satisfies the condition given under 11AA. So the conditions are given under section 11AA for a CIS. Now let's go to section 11AA. Subsection 1 provides that any scheme which satisfies the condition referred under subsection 2 and 2A shall be a CIS. We will see, wait a minute. So there are going to be 3 subsections that I will teach you now. They are all important and has to be quoted in the exam. Any pooling of fund, now pay attention to the subsection 3 also. Any pooling of fund which is not registered by SEBI involving a corpus of 100 crores or more shall be deemed to be CIS. So this is about deemed CIS. Now 11 AA, 11.2 and 11.2a we will be seeing now here. So what is it? I told you this section 11 subsection 2, 2a and 3. So you can mark it as most important part of the chapter. You should know with the section number. So let's see. Section 11 AA subsection 2. Okay, then subsection 2a and subsection 3. So 3 things you should know. First is subsection 2. It gives you the real meaning of CIS. They gives you the real meaning of CIS. What does it say? That I told you it's a pooling of funds, then the funds are invested on behalf of the investors. Whatever return is there is then given back to the investors. The investors do not have day-to-day control over the scheme because they give the money and now they have to sit and see what returns the company is giving them. Any scheme, okay, or arrangement offered by any person under which, so any scheme under which contributions are made by investors. So we are seeing any scheme in which contribution. So let's say this is a CIS, collective investment scheme. There is going to be contribution, that is investment of money in this scheme by whatever name called, and it is going to be pooled. That is the first thing, pooling of money, collecting of investments by investors, pooling of funds by investors. Once they are investing, are they investing for charity or they expect in return? Please tell me, are they investors putting money into CIS for return or for charity? Obviously they are doing with a view to receive profits. Contributions are made by the investors with a view to receive profits, income, property, whatever. Then, so whatever they are doing is with the hope of getting, that they are expecting that they will get rich. Now, once they make, obviously the property will be managed on behalf of the investors. So the property, the money, the assets, the investments will be managed on behalf of the investors. So the CIS scheme will make investments on behalf of the investors. The investors do not have day-to-day control over the management. So here they give you the definition of CIS. So CIS is a collective investment made with the hope of getting profit. It is going to be managed on the behalf of the investors, and the investors don't have day-to-day control. This is given under section 11 subsection 11 AA subsection 2. Now let's see what is section 2 AA. 2 AA talks about any scheme offered by any person satisfying the conditions under this act will be deemed to be CIS. So what is section 2A talk about? Any scheme offered by any person satisfying the conditions will be treated as this. So if a scheme satisfies conditions, it is a CIS. And subsection 3 is very important. Now first to say what are CIS. Okay, they also cover deemed CIS, including deemed CIS. We saw 100 crores or more unregulated funds are CIS. Now we are seeing subsection 3. Subsection 3 talks about what are not CIS. Subsection 3 talks about what is not CIS. The following shall not be collective investment schemes. This is given in your subsection 3. These are not CIS. Now, logically, you will only be able to answer 3-4 points from here. They have given you 9. Out of that 3-4 points, you will answer on your own. Now, this is the most important. Whenever they ask you about collective investment schemes, you will mention subsection 11, subsection AA, 2A, 2AA, 2, 2A and 3. Now, what are not CIS? Let's see. First, if a scheme is registered under mutual fund, pension fund, chit fund, insurance fund, can it be a CIS? I want you to unmute and answer. If a scheme is already registered in a SEBI scheme, then obviously it will be called that scheme. Now it will not be CIS. So obviously any insurance will not be, any pension scheme not covered, any chit fund not covered here, Nidhi company, these are all dedicated pooling of funds under a dedicated circle. So those laws will apply, not CIS laws. CIS law for applicability, you have to be registered under CIS or you have to be unregulated fund over 100 crores or more corpus are deemed to be CIS. That's it. Second, even deposits. People are pooling money with company, but a company law is there na for that. Deposits, nidhis, these are not this. Any scheme of mutual fund, any other scheme with central government will specify. Then they say any deposits made by to RBI, to NBFC banks. Now all this are, there is a separate provision for all of them. So then this will not be called as CIS. Next is pooling of funds by cooperative societies. Now in a cooperative society, all the members also give maintenance for common welfare, but it is not for investment. So even cooperative society where every member is pooling in maintenance amount, so that is also pooling of fund, but that is not a CIS. CIS are proper business bodies which are not registered anywhere else. They will be treated as CIS. Concept perfectly clear. What are not CIS? Very simple concept. Very good. Moving forward. Other important definitions, okay? So if it was important, they would have given first only. They have said other important means they're not that important. Now pay attention to some points which I will explain further. Collective Investment Management Company. What is it? Sir, you didn't explain. Sir, you didn't. What is this? See this. What I told you, the CIS trust. They will take money, they will create a trust, they will collect the money, then they will form a company. In the company, they will, this company will launch schemes, collect money and invest. So the Collective Investment Management Company is a company incorporated under the Companies Act or any previous law whose object is to do collective investments. What are close-ended? Very important. This I will come and I will explain, but let me tell you in short now. Now, when the CIS, okay, is launching these schemes, investors are investing, okay, there are investors, they are making investments, different investors are pooling money. Now these CIS units, okay, they will give, because these can't be shares, these are units. These units get compulsory listed, these CIS units which are there. For example, one unit might be for 1000. Investors will buy 1000 or 1 unit. So it depends how many shares or units you are buying. Now understand what I'm going to explain, okay? The investor gives money, in return CIS will give units. Concept clear? As you invest in companies give you shares. In mutual, this is very similar to mutual funds. In mutual fund, when you invest, you get a unit of a mutual fund. Same way you get a unit of CIS. This CIS units are compulsory listed on stock market. So compulsory listing of stock market, it is there on stock markets. Clear till here? So like we launch shares, right? And we collect money. CIS will launch units and collect money. Concept is same. These units will then the CIS will apply to SEBI for listing of CIS units. So these will be compulsory listed on the stock market. Please note this. Third, these will be close-ended. These all the units will be close-ended only. That means what? Once the CIS has launched a scheme, they have launched a scheme, then the scheme will have a tenure, will have a maturity, or I will call it as a lock-in. During the lock-in period, you can't sell it to the company, neither can the CIS launch more units. So close-ended means what? If they have issued 1000, that is it, 1000 units are there. They can't launch additional, they can't bring a FPO, they can't launch more units. So these will be close-ended. Sir, what do you mean by close-ended? So close-ended means no new units will be launched. That is why it is closed. Offer over. How many? 10,000 units we did, 10,000 will get listed. No further new units will be launched in that scheme. Second, it will be closed. So maturity period also they are saying it will be minimum 3 years. Means the lock-in is there of 3 years. So if the investor is investing in a CIS, the CIS will give you maturity date. They will tell you that after so many months or so many years I will redeem. So they will tell that after you will keep getting return, and after so much time we will give you your principal amount also back. So minimum lock-in period will be 3 years. Minimum, not maximum. So if you are investing in CIS, you are investing for short term or long term. Please put in the chat box if any investor is investing in mutual fund, they are investing for short term or long term. Obviously, minimum 3 months your money is blocked. CIS will get to use the money for investments. So till that time, you see 3 months your money is blocked. Okay, minimum 3 months of this. Another important point is if the investor wants to sell. See, if the investor within 3 years wants to sell, so investor will not be allowed to give to the CIS. CIS will say we will not buy back. Investor can sell to another investor, that is fine. So I can say that secondary market trading will be allowed. Secondary market trading allowed. That means during the 3 years, the unit can be sold to another investor. So I can get someone else in my place. It will be on stock market, so it will be traded. CIS will redeem that amount only on maturity date. Okay, so this will be collective investment scheme will be there and maturity, and there will be no provision for repurchase before the expiry by the CIS because it is closed. CIS will close after taking the money, they will close the door. Now if you want to sell it to others, not to us. After 3 years we will come back. With the CIS money, the CIS can buy property, they can buy building, they can do anything they want. Okay. We will see what is appraising committee also. Agency, they will verify proposals, they will look at investment opportunities, etc. Okay. Now registration. Now this is the concept. The most important part is done. Now there is a few more important. I will go through fast. Whichever is important, I will stop on that. Okay, no person other than CIS management company to launch scheme. Obviously, a company will launch the scheme. Then register. So every person will have to be registered with SEBI under the CIS scheme. Application. So you will make an application to SEBI. Application by scheme or arrangement for deemed to be CIS. So I told you, any scheme which is taking money of 100 crores or more, they are deemed to be CIS. They have to be compulsory registered under this scheme. Okay. Then this is not important because it's for those not important. Now coming to winding up of the scheme. Now pay attention. What do you mean by winding up? Now once the scheme is launched, now I want to wind up. Wind up means shut down. So when I will wind up the entire scheme, I didn't get approval from SEBI. Okay. I failed to make application to SEBI. Okay. And I failed to comply with any of the conditions. So it will be wound up. Now that is also not important. I'll tell you this. This part is important. Very, very important. The collective investment management company, what all it cannot do. Business activities, restriction on business activities of CIMC, collective investment management company. So restriction on business of collective investment management company. Clear? So let's see what is the restriction on the collective investment management company. Very, very simple. First, shall not undertake any other than that of managing CIS. So obviously this company will do nothing else. So no other business than CIS. You tell me, can this CIS scheme launch classes? They'll say, what nonsense. You can take this money only for the CIS scheme. You cannot do any other business then. So this company will only do business of CIS. Simple. Shall not act as a trustee of any CIS. See, shall not act as trustee. Shall not act as trustee. Now obviously trustee will be another body, another person. You can't be the principal, the agent, employee, the employee, everything you cannot do. And what is the logic? See, understand. The trustee will look whether the CIS and the CIS is working properly or no. So they will work for the benefit of the unit holders. So CIS company only cannot become the trustee. So the accountant can only not do the audit, right? Audit will be done by another person. Next, can launch any CIS for investing in securities. So not in securities. What I told you, normally CIS don't invest in stock market. CIS don't invest in stock market. They invest in property. They invest in business. They don't invest in shares. Because for that we have mutual funds. However, they have said that if the offer document is saying that they want to invest in securities, then they can. But normally CIS collect the money. They buy land and sell land. That is fine. They buy goods and they sell goods. That is fine. They invest in business. That is fine. Stock market trading, they don't do. Clear? That is what mutual funds normally do. And they cannot invest in any CIS floated by it. So they cannot invest in a CIS floated by them only. Okay. So let's understand this concept also. Very, very simple. If I have scheme A, I have launched CIS scheme A, B, C. Now A money I have taken, I cannot then invest A money in B. This cannot be done. Okay, because if investor wanted, he would have invested directly in B and all the objects will be different. So I cannot, scheme A money cannot be pooled in another scheme of the same company. do business. That's what they are saying. Now, obligations of collective investment management company. Now, this is also, they have asked once, what is the obligation of this company? Very simple. Very simple. Apply your mind. Socho, think and tell me. This CIS scheme, what will they will do? First, you will say that they are responsible for managing the funds and property of CIS on behalf of unit holders. So, CIS company is responsible for the funds and investments of the unit holders. They have to exercise due diligence. They have to take proper care where they are spending the money. They have to take due diligence in care in managing the assets, and also responsible for acts of commission and omission of its employees. So the company will also be responsible for the acts of its employees. It will be remain liable to the unit holders. Okay, so they will be liable to unit holders means what? Obviously anything is there wrong that happens, then they will answer to the unit holders. To be incompetent to enter into any transaction through its associates. I cannot take the money of the investors and invest in my brother's company. Should you think we should allow public money to invest in associated enterprises, associated persons, relatives? They will say no, that is not fair. You are interested, so invest in a new project, don't invest in your own relative's project. Appoint a registrar and share transfer agent. Obviously this company is there, so it's going to list the units, so there's going to be trading. So for the trading you appoint a share transfer agent. Receive money, all money, receipts and payments on monthly basis. Hold meeting. Now how many times they should hold board meetings? In company law, how many times they should hold board meetings? So here they also saying the similar thing, that at least twice in every 3 months they should hold a board meeting. Okay, and adequate insurance should be done of the properties that they are buying. So CIS mostly with the funds they buy properties. Okay, submission of documents is fine. Trustees and their obligation. Now trustees are there. A collective investment scheme should be constituted in the form of a trust. Now pay attention to the structure of the law. There is the collective investment scheme. This will be formed in the form of a trust under the Indian Trust Act, where investments will be made. Okay, investors will invest here, investors will invest here. Then this trust will form a collective investment management company. This company's job is to launch schemes, various schemes from public, and then they will invest, etc. In this, where to invest? Okay, they will invest funds. Now where to invest, what to do, which project to take. So then they have a appraising committee. Appraising committee will be made, who will appraise various projects, select projects, etc. In this there will be a trustee who will look after the interests of the unit holders. There will be different schemes that will be launched. All these schemes will all be close-ended and will be listed on the stock market and will have a minimum lock-in of 3 years. Okay, so this is what collective investment scheme will be launched in the form of a trust. Okay, then contents of trust deed will be same. Okay, who can be eligible, etc. Very simple, that they should not be connected, they should not have any interest. You can write the same concepts of debenture holder trustee or deposit trustees, etc. because trustee job is the same. See, the trustee shall have a right to obtain CIMC information regularly, inspect the books, etc. Now these points you can just read. Okay, quickly some few points I will tell you. What will the trustee do? So if I am the trustee here, so I will look whether the properties are insured. I will look whether the funds are not being divulged any other place. I will see that proper disclosures are made. I will see that proper reporting is done. I will see proper audit is being done. I will see that minimum 2 board meetings are held in a in 1 quarter, etc. Right? So I will see that all the auditors, all the intermediaries are appointed. Okay, the company has proper infrastructure. Nobody is taking unfair advantage. Okay, etc. Then on quarterly basis they will review termination of trusteeship. Okay, if the trustee has been wound up, he ceases to be a trustee. Okay, if in the interest of the unit holders they feel that he should be removed. Okay, so not important. Termination. Now you can mark this as important, this part as important. Now what is this? Procedure for launching CIS scheme. Now I told you that the job of this collective investment management company is to launch schemes, right? So how you will launch the scheme? So they are saying the scheme will be launched by collective investment management company, one, only after it is approved. So it should be approved by the trustee. Second, they have to get a proper credit rating from a credit rating agency. So there are these companies which grade and rate various companies. So rating should be taken and should be told to the public, so they know what company, how good or bad it is. And third, you cannot launch any scheme without it being appraised by an appraising committee. So this appraising committee is like a review committee. They will look that why you taking the money, where you will invest. They will look at the project feasibility. They will look at the projections. They will look at the future inflows. Accordingly, they will say where you can invest and where you can not invest. Okay, so very good move to protect the investors. Now, super important. Okay, this I can say is most important. Close-ended schemes and duration. So all CIS schemes will be launched only if it is close-ended. Close-ended means what? They have fixed time period, duration, and within that they will not launch new schemes, new units, and they will not even buy back. Close means what? I have issued 10,000, I'll close the door. After maturity you come, I'll give you your money back. And the duration shall be not less than 3 years. Insurance has to be taken of the investment CIS property. One very important, they cannot go and guarantee confirm returns. See, in business, in market, nothing is certain. So they cannot in any of their prospectus, offer letter, offer document state that they are going to get guaranteed returns. Okay, so they will always have to say that it's subject to market conditions. Read the offer document carefully. Offer document is basically the prospectus containing basic details of the schemes, etc. And there should be nothing misleading, etc. Now moving ahead, I think we are almost done. Now, winding up of the scheme. So earlier I told you winding up, that part was not important. The earlier winding up is not important. This winding up is important. Okay, what do they talk? First is collective investment scheme may be wound up when on happening of an event which in the opinion of the trustees feel that the scheme is horrible, wind up the scheme. Second, if the unit holders, 3/4 of the unit holders feel that the scheme is horrible. Next, if SEBI feels, no, SEBI is feeling, trustee is feeling, 3/4 is feeling, or the CIMC is only feeling. So 4 people can feel that it is a horrible scheme. Let us wind up. SEBI, CIMC company itself lost confidence. Third, unit holders lost confidence. And fourth, trustee lost confidence. In such cases, the scheme can be wound up. Okay, general obligation, maintain proper records, etc. Not that important. Audit report has to be taken. Okay, now again very simple point that they've taken, the liability for action in case of default. So obviously if any of the directors make a default, contravenes any of the provisions, if the CIMC contravenes any of the provisions such as giving false data or does not cooperate with any inspection or fails to comply with SEBI directions, or fails to resolve the complaints, commits a breach of the code of conduct, fails to pay fees, okay, any of this, then they shall be liable under the scheme and it could also be cancelled. Direction, if SEBI wants, they can give directions, recommendations, suggestions to ensure that they comply with the laws. Okay. Any person aggrieved by an order of SEBI can appeal to SAT. Penal provisions are there, not important. And the most important part of the chapter again, okay. So this is most important. So whichever I'm saying important, that you can do from this chapter properly. Rest all is fine. So first they will have to, CIS has to take a seek registration with SEBI. CIS shall be constituted as a trust should also be constituted, and a CIMC should also be constituted. At the time of registration they can have 3 crores, but within 3 years they have to increase it to 5 crores. So while registration you can start with 3, but within the next 3 years you should increase your net worth to 5 crores. Compulsory filing of offer documents. Obviously you will file all these offer documents with SEBI. Mandatory rating, mandatory to be rated from CRISIL, Fitch, ICRA, CARE, SMIRA, etc. Okay, these are all credit rating. You have to clearly say that you cannot give any assured returns. You have to comply with the advertisement code, okay, where you see all these newspaper advertisement, public advertisement, they have to follow certain codes. Subscription period, okay, no scheme shall be kept open for a period more than 90 days, means maximum 90 days time period, offer period where you can subscribe in 90 days, 3 months, a lot of time. Duration of the scheme shall be minimum 3 years, because we saw minimum lock-in is of 3 years. All the property should be insured, and listing shall be compulsory listed on the stock market. Okay. Rule of CS. Okay, you have to ensure that everything is complied with. Okay, and that is it. I have completed the full chapter in depth from the module, covering all the past exam questions. Okay, so I am done with this particular topic as well. Okay, so I've covered almost everything from your now. Very good. So I hope you all understood this perfectly. Okay, do like the video, and if you're on the first time watching my lectures, please hit the subscribe button so that it will help you in your exams. Okay, now next, what do you want to do? Can I now start with the main LODR? Okay, now can we start with SEBI LODR regulations 2015? If you have not subscribed to our Telegram group, please join the Telegram group, inform your friends. Now I'll be starting with SEBI LODR. Okay. I hope you all understood this chapter well. Okay, so I've covered it. I think 3-4 chapters I've done it properly, that you don't have to worry. Out of 16, 3 only I finished, and few other chapters are there which are there in previous marathon of mine. You can complete it beautifully. Okay, now coming to SEBI LODR. Okay. So have you all understood till here? I want a yes, no, something like that, a response from you all. Okay. So what we'll do is we'll take a break. Okay. Then we'll start SEBI LODR regulations. Till then you all can revise other chapters. You can revise the chapters that we have done. Okay. And then we will start with another topic. Now we will start around 5 p.m. 5. Okay. We resume. Okay. So I'll see you all with the revision of LODR after the break. Thank you. Hi guys, am I audible to you all? So we will be doing the SEBI LODR 2015 now. Also remember, this is a vast regulation, but I will give you the important things which come from the exam point of view. Just before I start, I need a thumbs up from you whether I'm audible or no. Okay, and we are ready to begin with this particular regulation. So just in the chat box, if you all can say if I'm audible or no, it's great. I can quickly begin. Okay, great. Okay, now with me, I have LODR is a full regulation. What is important from exam point of view? We have to first know that, because everything doesn't come. There are very specific things which I can tell you that this will come from the exam. Okay, so first I have one with me, the amendments. I have the 2015 amendments. Okay, very simple. In my notes all the amendments are covered. So if you are my student and you already have my notes, all these amendments are already covered in my notes. Now let's see the questions first. So first we'll do the questions from LODR, and then we will come for the recap of the provisions, and we will focus on the questions that have come repeatedly in the exam. Okay, so first the question is, all the questions of LODR, let's see. They've given that Satwik is a managing director in a listed company, as well he's a MD as well as an independent director in 3 other listed companies. One of the leading listed e-commerce companies offered him a independent directorship. Whether he can accept the directorship, explain. Now I can tell you, in last 3 attempts, always LODR question that they are asking is regulation number 17A, because 17A contains the amendments, and according to me the most important regulation is regulation number 17A, has been asked 3 to 4 times. So what is your answer? He is the Mr. S is the MD in one company and 3 companies he is ID. Can he become one more company? Can he become a director of one more company? So let's read what does regulation number 17A talk about. Most important. Okay, so this is the most important and repeatedly asked question, and very important also, how many companies you can become a director. Now don't go and tell me company law provision. Here we are seeing in listed companies, you have to remember that there are more restrictions. So company law is baby provisions. Here you need to know a little more. So regulation number 17A talks about the maximum number of directorships that you can hold. The maximum number of directorships, including any alternate directorships at one point of time. They say that a person shall not be a director in more than 8 listed companies. This is in 2019. So we will cut this part because 19 is already gone. And not more than 7 listed companies in from April 2020. So here you have to remember the most important, 17A says you can become. So regulation number 17A, maximum number of directorships, okay, that you can hold. This is given in your regulation 17A. So what is the answer? So the answer is 7 listed companies. Max you can be a director of 7 listed companies. Now, however, a person shall not serve in more than 7 listed companies. That is fine. In that also further restriction has been put. Notwithstanding above doesn't matter what is above. A person who is serving as a whole-time director or managing director in any other listed company shall serve as an independent director not more than 3 listed companies. So if a person is already a MD, okay, in any listed company, then he can serve maximum ID he can become of 3 companies. Okay, so maximum number of independent directorships that you can hold is max 7 listed companies. If you are a MD or WTD of another listed company, then you can become a independent director of only 3 listed companies. Concept clear? What is the law? Very simple. You can become maximum independent director of 7 companies. However, if you are a MD or a whole-time director in any listed companies, then the 7 limit gets reduced to 3. Clear? See, now in this example, he was already there. He is a managing director, whole-time director. So what they've said, in the given case, Satwik is in a listed company as well as an independent director in other 3 listed companies. Since he is already holding the maximum permissible directorship, he cannot accept more number of independent directorships. Concept perfectly clear. This is the most important regulation, most repeatedly asked regulation number that you should know. Okay. Now, coming to the next question. Coming to the next LODR exam question. Okay, this is also of June 2022. What question they have asked? That Kian International Limited is a listed company in a leading stock exchange platform. It had appointed one executive promoter on a monthly salary. The company now proposes to appoint another executive promoter at the same monthly salary. The aggregate remuneration of the directors exceeds 5% of the net profits of the company. Examine with respect to the SEBI regulations the relevant approval required for paying this remuneration and whether it will make any difference if the fees paid is fixed salary. Now understand one thing, this what we are doing, it is of listed companies. For listed companies, regulation number 17 sub-regulation number 6 talks about the fees, maximum fees. Now we saw the maximum directorship, maximum number of independent directorship we saw. Now they're talking of maximum number of salary that can be given. So let's see what it is. Okay, what are they saying? That according to section 17 subsection 6, the fees payable to executive directors who are promoters, who are the promoters of the company, shall be subject to the approval of shareholders by special resolution. If so, the maximum compensation fees payable to director cum promoter, okay, is how much? Is annual remuneration exceeds 5 crore rupees or 2.5% of net profits, whichever is higher, or where there is more than one such director, the aggregate annual remuneration exceeds 5% of the listed company. So what is the limit? Let's look. Okay, so what was the first one that I have taught you? Regulation number 17A that talks about maximum number of independent directorships that you can hold, that can be held. So the answer is 7. And if whole-time director in another company, then only 3 independent directorships you can hold. Now we are doing regulation number 17 sub-regulation number 6. This talks about the maximum director remuneration that can be given if the director is also promoter or member of promoter group. So what is the maximum remuneration that can be given? So they have said, or 5% of net profits Here, what they've given? If where there is more than one director, the aggregate annual remuneration exceeds 5% of net profits. So, annual remuneration is exceeding more than 5% of net profits, or if the annual remuneration exceeds, so the annual remuneration is exceeding 5 crore rupees, 5 CR, or 2.5% of net profits, 2.5% of net profits, okay, whichever is higher. Okay, so you will get your category A, and you'll get your category B. If a company, if the directors want to pay a director annual remuneration in excess of 5 crores or 2.5% of net profit, whichever is higher, or annual remuneration greater than 5% of the net profits, then the directors will have to go and take or obtain special resolution. Concept clear? Two important regulations I am telling you. All of this is the repeatedly asked question. Rest all let it be whatever is there in LODR. We are doing the exam questions. Okay. So what is the answer? That according to regulation 7 sub-regulation 6, the fees payable to the executive directors who are also promoters shall be subject to approval of shareholders by special resolution if the annual remuneration is going this amount or the annual remuneration is going above that amount. Either of the limits get hit, you will have to take a special resolution. Clear? Now, in the given case, it exceeds 5% of the net profits of the company, and therefore they will have to take special resolution. Okay. And when they say remuneration means what? Remuneration means the total salary including the perquisites. So when we are computing the benefits given to the director, we will see the remuneration, that is the salary, including any perks or any kind of added advantage. So in the above question, what they have given now, it exceeds 5%. It exceeds 5% of net profit. So therefore, what compliance is required? It requires special resolution. And second is whether it will make a difference whether it is fees, compensation is paid in the form of fixed salary. Answer is no difference in provision. Any of the limits hits, special resolution is mandatory. Next, if we see, this is again one small little point, that e-voting by the shareholders of all the shareholders, SEBI has made some amendments in the e-voting provisions, where in order to bring in participation of the small shareholders also, and not only the non-institutional shareholders, participation was needed because they were not voting. So SEBI changed regulation 44 and they made it in a way that online voting can be accessible to many shareholders as well, where they have said that directly from your email ID you can do the voting. Now coming to the next important thing, so regulation 16 and 17, very important. Regulation number 16, what does it talk about? It talks about independent directors definition. Regulation number 16. Now next regulation that I'm doing, regulation 16. It gives you definition, many definitions are given, and we'll see definition of independent director. So as you read your company law, Similar points have been given in regulation number 16 as well. Okay, now let's see. Regulation number 16 gives the definition of independent director. It says that means an independent director is an outside director. So they are not whole time, they are not inside directors, they are not whole time or executive directors. So they are non-executive directors, okay, who along with their relatives hold together, okay, other than the nominee director. It states that such director neither himself nor through his relatives, okay, we know that they should not have any material connection. So they have said that the independent director, neither him nor his relatives should be holding more than 2% of the voting share of the company, then they can't become. For example, if I am holding 3% shares, so I get disallowed to become the independent director of the company. Why? Because I have a share, I am connected with the company. If I say anything bad, the share price will fall, so it will affect me. So independent director cannot hold more than 2% or more shares in that company. Next, cannot be a material supplier and should be at least shall not be less than 21 years of age. So 21 and above is allowed. Now what is the question? They have said that you want to appoint an independent director who is 20 years old. So after reading regulation number 16, which gives you the definition, can you appoint an independent director who is only 20 years old? So the answer is no. He should be at least 21 years of age. Elika holds 1% of the voting share. So yes, they can be appointed because the limit is 2%. Is a component supplier. So here it is written that if they are a supplier, then they cannot become independent director, and has given his office premise on lease to the company. So obviously there is a connection, so they will not be allowed to become an independent director. Clear? So this was there of 2022. Now coming to the next important provision that I want to know, that you should know for LODR, and these are the same regulations which will repeatedly be asked, okay, even in your exam. So let's see the next one. Amar, one of the independent directors of the company, intends to hold a meeting of independent directors without inviting the MD. Is the action of the independent director valid? Now this independent director wants to call an independent directors meeting only, and he is not calling managing director. Managing director is an executive director, he is an inside director. So the answer is it action allowed? Yes, allowed. Why? Because in 1 year, at least one independent directors meeting should be done where no other executive director is attending. So his demand that he wants to hold a private meeting with independent directors only is justified. This, if you see regulation number 25, okay, of SEBI LODR, the independent directors of the listed company must hold at least one meeting in a financial year without the presence of non-independent directors. Then they have spoken about vigil mechanism. So vigil mechanism is same provision as that of company law, where you read section 177 talking about audit committee. In that they have spoken about vigil mechanism as well. So vigil mechanism is the duty of the audit committee to ensure that if there is any whistleblower in the company, they should be safeguarded. If someone wants to complain, they should be safeguarded. They should not be victimized. They should not be harassed, etc. Okay. Then coming to December 2019 question. December 2019 question. Neo Engineering Limited is in the list of the 1000 listed entities on market capitalization. Based on the changes made in LODR, what composition of the board would be there? Explain. Now we'll see the composition of the board is given in regulation number 17. Now the composition of the board of directors shall have the optimum combination. Okay, they've told that we'll see when we're doing this, the board of directors of the top 1000 companies. We will do, I'll tell you which. Yeah. With effect, this is what is important. Okay. Now, for us, this is important because we are in 2020 onwards. Okay. So, top 1000 listed companies should have at least one woman director, one independent woman director. So, now let's read regulation number 17. Regulation number 17 talking about board of directors. Top 1000 listed companies, okay, should at least have one independent woman director. Clear till here? At least top 1000 listed companies should have at least one independent woman director. Second, with effect from 2020, top 500 listed companies shall ensure that the chairperson of the board of the listed company shall be a non-executive director and not be related to the MD. Okay. So this is what you should remember. This is what I want you to remember. Top 1000 listed companies should have at least one woman director, one independent. Now, every listed company has to keep an independent director. So there was already one independent director. Still, do they have to keep one more woman director? Answer is yes. One woman director has to be kept who is executive director, whole-time director. Your top 1000 listed companies have to keep one independent, unrelated. So top 1000 listed companies will have one executive director also, and they will have one independent director also. Clear? So make a note of this. Then they've given you what is the half yearly compliances of SEBI. Okay, so please prepare a half yearly compliance requirement of as per the LODR regulation. So we'll see. Then again, for ensuring independence in this spirit, okay, they have given you accepted many committee setups of Mr. Uday Kotak. Explain 4 amended provisions with respect to independent directors. So obviously the most important is with respect to independent women director in a single meeting of independent directors and the number of places that you can become independent director. Okay, that is 7 and 3 we just did. Then also one, you have to remember the quorum of board meetings. The quorum of every meeting of the board of the top 1000 listed companies with effect and top 2000. So we are concerned with this second category. Okay. Top 2000 listed companies shall have at least 1/3 of its total strength or 3, whichever is higher, including one as its independent director. There will be performance evaluation. Evaluation of the independent director shall be done by the entire board. Okay, with respect to the performance and the fulfillment of their independence. So they will recheck. Now, then they've given you write the quarterly list of compliance. So this quarterly list has come twice in the exam. Okay, half yearly is very less. Yearly is also very less. So quarterly compliance they're asking regularly. So you can just go through this quarterly, what all compliances need to be done. Okay. Then Bombay Stock Exchange has suspended the trading of XYZ Limited for violating the listing agreement. The company has now complied with the listing agreement requirements by referring to the SEBI circulars, discuss the criteria for trading or suspension of shares on the market. Okay, so if there is a failure to comply with the composition of the board, constitution of the audit committee, if there is a submission of the criteria, okay, if they violated any of this, then it can be suspended. Then comes your regulation number. Now another very important regulation of LODR, it is there, that is your regulation number 23, sub regulation number 2, talking about all related parties transactions require approval of audit committee. So we will see all of this when we are doing. Okay, audit committee can grant a blanket approval, omnibus approval for all related party transactions. They cannot give omnibus approval for transactions which are greater than 1 crore in value. Okay, and the approval that they give, a blanket approval, will be valid for 1 year. However, provisions related to prior approval shall not apply in case it is entered between holding and wholly owned subsidiary. So between these two, they are one and the same. So that time approval of auditors is not needed. Now let's look at the next question that they have asked from LODR. So now they have asked, GK Limited is a listed company having a paid up capital of 8 crores or more, preference shares of this much, and net worth of this much. The management intends to implement a code of conduct for the board of directors and the senior management. You are required to prepare a draft agenda of the board meeting and also advise if the equity share capital increase to 15 crores. Also advise on the situation. Okay, if it increases. Now if you go to see, as per SEBI LODR, okay, corporate governance provisions are given. The listed companies having paid up capital of not exceeding 10 crores and net worth not exceeding this, the provisions of this will not apply only. It will not apply. So in the given case, it is not exceeding, it's 8 crores and net worth is also not exceeding. Hence, thus regulation 17.5, which talks about code of conduct, does not apply to the GK Limited. Now again, if we will see when we do regulation 17 sub regulation number 5, which they talk about code of conduct. Okay, it is to be made when the company's paid up capital and net worth, paid up capital and net worth, paid up capital is exceeding 10 crores or more and 25 crores or more, only then they have to make a code of conduct of the company, otherwise this provision does not apply. Okay, now next is in June 2021, what question have they asked? Very simple. You are the company secretary of Fortune Limited. Your managing director desires a list of yearly compliance. Please give the yearly compliances to the board. Okay, so then you will have to give what is the yearly compliances to be done by listed companies. So they have to pay the annual listing fees, disclosure of financial results, annual report, then any changes in the annual report, all of this is there. Annual report to the security holders. So we're going through the exam questions. We are seeing which all regulations they have asked in the past exam. Okay, next if we see again, and I think we are done with the exam question. One more time they have asked regulation number 17A. Now regulation number 17A, again it has been asked in the exam, and before that also they have asked the maximum number of directorships given under regulation number 17A. So 4 times they have asked regulation number 17A, and that is it. We are done with the exam questions of LODR. Okay, now let's get into the provisions and see how do we end up doing it. So I will give you the provisions and the regulation that is important from exam point of view, and those only I will touch upon. Okay, now where does LODR apply? In India there are 2 nationwide stock exchanges that is NSE and BSE. So these are the two major stock exchanges in India, NSE and BSE. So if any listed company, if any company wants to be listed on NSE or BSE, then they have to comply with SEBI LODR regulations. Now when you go to see the structure of the entire LODR regulations, okay, now pay attention. From here you just have to do obligation of listed companies, okay, which is your, okay, or specified securities, regulation number 15 to regulation number 48. All the exam questions have come from chapter 4 of LODR, regulation 15 to 48 only. Now they go on to say it applies to whom. So LODR regulation applies to listing of securities. So any kind of securities that you are listing, you have to comply with the listing agreement. Means what? If my company wants to get listed on NSE, BSE, I have to sign a agreement called as a listing agreement. And there in that agreement, whatever regulations you will read, I will have to comply. So whether I'm listing mutual fund units, or I'm listing IDR, or I'm listing units of securitized debt instrument, now all this you might not know what these instruments are. You just know shares and debentures. So there are many other kinds of instruments. Any instrument listed, they have to comply with these regulations. Now from here, which are the regulation numbers which are important? Now regulation numbers which are important are here. So exam questions from here only it will come. Regulation number 6 says that you have to appoint a company secretary as a compliance officer. Regulation number 7 says that you have to appoint a share transfer agent because listed company shares will be transferred. Regulation number 13 talks about scores, that is a SEBI complaint redressal system. If anyone is there, they want to complain on regarding a listed company, they can go to scores website and on that they can make a complaint on the listed company. That is given there. Then coming to regulation number chapter 4, okay, which I told you is the most important. That is your regulation numbers, most important. So regulation number 16 gives you definitions. Most important definition is there. Whichever I'm doing like this means it is a exam question. So definition of independent directors. Second, they give you provision with respect to BOD, okay, board of directors. So this is also very, very important. Then comes the maximum number of directorships that you can hold. Most important, the answer is 7. You can become a independent director of maximum 7 companies. But if you are a whole-time director or executive director in any company, then only 3 companies you can hold independent directorship. Then remember the next regulation. Now understand one thing, there is 17A, there is also 17B. 17B has been omitted and repealed. Okay. Now in its place there is a new regulation, that is 17C, which has been added. Okay. So let's see what is that. Now here we are into the amendments. 17C. Now what does regulation 17C say? Very, very simple, that whenever the listed company shall ensure approval of the shareholders, if they are appointing a person on the BOD, on the director or as a manager, okay, it should be taken within the next meeting or within a period of 3 months from the date of appointment, whichever is earlier. So let's say the board of directors has appointed Mr. A as the director of the company. Now this that we have appointed, this we have to take approval of the shareholders. Within how much time? Okay, within a period of 3 months from the date of appointment, or if there is a next meeting within 3 months. So next meeting or 3 months, whichever is earlier, I have to take approval of shareholders. So if BOD has appointed director or manager, so then shareholders approval will come in 3 months or by next meeting, whichever is earlier. Concept clear? Another thing, if the BOD wants to appoint someone who was rejected earlier, so if the board of directors wants to appoint a person as a director or a manager who was rejected by the shareholders, then they can do it only with the prior approval of the shareholder. So you cannot appoint him, you have to first take approval of the shareholder. So this is given in your regulation number C, 17C. Then coming to the next important regulation numbers, very simple to learn also. You can remember answer risk. Answer risk. Now what is this? It starts from your regulation number 19. Okay, it starts from your regulation number 18, 19, 20, 21. This is answer risk, means what? Audit committee, nomination remuneration committee, stakeholders grievance committee, and risk management committee. Clear? Can you remember with the regulation number? So 18, 19, 20, 21. Remember, answer risk is audit committee, B is NRC, C is stakeholders grievance committee, and then the last one is risk management committee. Now all these committees you must have done in company law. This is important. Regulation number 21 is important because it is something specially applicable to listed companies only. Okay. Then comes vigil mechanism. So we know that audit committee has to oversees the vigil mechanism, whistleblower policy. If anyone is a whistleblower, wants to complain, so we have to safeguard them. Next, if we see regulation number 23, very important, that is your related party transaction and omnibus approval. We saw it came in the exam. What is related party transaction? So whenever we are doing a transaction with a related party, buying, selling, keeping them as agent, appointing them office of profit, in company law also you must have done. So then related section 188. Okay. Now related party transaction if you are doing, then every single related party transactions requires audit committee approval. Now what audit committee does, it gives a blanket approval for regular transactions. So they give a omnibus approval. Omnibus approval is a blanket approval. Keep doing, but for transactions which are valued less than 1 CR. Okay, if it is more than 1 CR, then they cannot give a blanket approval. Every transaction which is of high value, more than 1 CR, has to be checked individually. Then comes regulation number 24. It talks about with respect to unlisted material subsidiary. So this is also an exam question that they have asked. What is a unlisted material subsidiary? So it is a unlisted company. It is a subsidiary of a listed company which is having a certain amount of turnover, very good amount of turnover. So we'll see what is that limit that they have given. Then comes regulation number 24A, that is your secretarial audit and secretarial audit report. Okay, very important. Company secretaries do a secretarial audit. So we'll see what is the limit given. Regulation 25 talks about obligation that independent directors have to do. Then 27 corporate governance report. Okay, then from your regulation number 33 talks about financial results. 34 talks about annual report. 34(2)(b) talks about a business responsibility and sustainability report. Okay. Dividend distribution policy is there, change in the name. Okay. Now that is it. Now if you go to see, only these many regulations are there which you should know and just read through. Okay, because whichever I've highlighted or marked, from there only exam questions will come. Now let's look at the compliance calendar. We saw that they have asked twice in the exam. 2 times they have asked in exam. Now they'll ask, for example, in a listed company, they have to do regular compliances. So some compliances have to be done quarterly, some have to be done half yearly, some have to be done annually, and some like M&A, etc. have to be done on event basis. When you do it, dividend declaration, when that event happens, then you have to do the compliance. So in your module, whichever you have, I'm sure you have a table like this. That table read, okay? That table you remove 5 minutes, because see, I will show you what all you have to remember. This you have to learn. Whatever table is there, we will try to recollect how it is given. But just remember, those you have to sit and learn the compliance calendar. Now, if you see few compliance calendars, I can show you directly only, okay? Now, one second. See, let's talk about annual compliance. Now, if it is an annual compliance, so obviously annually annual report will be going, transfer transmission, financial results will be declared, okay? This will be done. Then event based are there. So you all just go through the table that is needed, okay? That is important to be seen. Okay, so quarterly compliance, few of the points we can see and we can complete. For SME, small and medium time exchange also, you'll see similar points only, especially shareholding pattern, deviation, financial results, transfer transmission, initial disclosure, all these points will come common, okay? Then even if you see related to related party transaction, secretarial audit report, very very important, within 60 days from the end of the financial report, okay? Financial year end. Now coming to the core provision, and then they've also given you certain policies that are to be done. Like for example, certain times they give you that the listed company has to make policy, certain policies in the company like how you have a dress code, like that they say policy. Make a document preservation policy. This is given in your regulation number 9, that which documents you will preserve permanently, which you will preserve for 8 years, that will be done. Then policy with respect to their material subsidiary, what they will do with this material important subsidiary, risk management policy, etc. So what all is risk, etc. Then comes code of conduct, okay? Now we saw that code of conduct is not applicable to all companies, only certain companies this threshold is important. So we will see when we do regulation number 17, sub-regulation number 5, okay? Then materiality of related party transactions with related party shall be reviewed by the board of directors once in 3 years, omnibus approval, etc. Okay, we will see. Now coming to the regulation wise. Now from here I will take you to the important regulations directly. Okay, so let's see. So all this is there. See, regulation 5, 6, 7, 8. Okay, till here entirely is there. But we will start from the regulations which are important from exam point of view. Now it starts here. I told you regulation number 15, 16, 17. Okay, these are important. Now I told you definition of independent director. Now independent director is the outside director of the company. They have given you very similar points as compared to company law. Independent director is a non-executive director, okay, who in the opinion of the board has requisite skills, who is not related to the director, does not have any pecuniary relationship in the past 2 years, is not a relative of the company or its holding subsidiary associate, of an amount 2% or more of its gross turnover of 50 lakh rupees, etc. Who is not holding any key position in the law firm, financial firms, etc. Not okay. Now coming to regulation number 17. Okay, so this is important. So the composition of the board of directors shall be as follows. the board shall have a optimum combination of executive and non-executive director with at least one woman director. Optimum combination means they should have inside, outside, part-time directors all in a proper level with at least one woman director. And not less than 50% of the board shall comprise of NED. Means 50% should be non-executive directors, not full-time directors, part-time directors should be there. Minimum 50% on the board. Provided that the board of directors of the top 1000 listed companies shall have at least one independent women director. Very, very important. Okay. Now, let's see this example, and I feel this example can come in your exam. Okay. So this is important. First, ABC Limited is a listed company and having one woman director. So they have a woman director as in executive director. The company is within the top 1000 listed entities. Whether they still have to comply with whether this company still has to appoint another woman director. What is your answer? Yes or no? I wanted to put in the chat box. So the answer is yes, they will have to appoint, because here we are talking about independent director, independent women director. So the board of directors of the top 1000 companies have to appoint one independent women director. Okay, from 2020 onwards. Now, if the chairperson is a NED, okay, if the chairperson of the board of directors is a non-executive director, so that is a good thing or a bad thing? Very good thing that is the outside directors are there, the part-time directors are there, so they will ensure that there is no monopoly, nothing wrong is going on, they will bring in outside view. Then at least 1/3 of the board of directors shall consist of independent directors. Okay, then at least 1/3. So if the chairperson is NED, then 1/3 will consist of independent directors. Okay, where they have the listed company does not have a regular non-executive chairperson, then half of them shall consist of independent directors. So if they have a executive chairman, executive director, then half of them shall be as independent director. See, first we will have to see chairperson is executive, non-executive. So you will say executive director. So then I will say half of the board should be independent directors. Okay. Then if I say no, my chairperson is non-executive, then I'll say 1/3 of the board of directors should be ID. Now if you go to see 1/3 and half, so here we are saying we are making the independent directors number more. Why? Because this chairperson is connected, is a whole-time director of the company. Okay, so we are saying more than 50%. Here we keep it less also, 33% ID is there, it is fine, because chairperson is non-executive director. Okay, so that is important. Remember the composition. Okay, they ask in the exam, composition of BOD, important from exam point of view. This is your answer. Now then they say, can you keep a really old director, extremely old? So answer is no listed entity shall appoint one person or continue to appoint any person as its non-executive director who has attained 75 years unless a special resolution is passed. So maximum age is kept as 75. If beyond 75 you want, take a special resolution. With effect from 1st April 2022, the top 500 listed entities shall ensure that the chairperson of the board shall be, now with effect from 1st April 2022, the top 500 listed entities shall ensure that the chairperson of the board of such company shall be non-executive director. So it's a very good thing. Chairperson, we are saying that should be non-executive director and shall not be related to the management or should not be coming under definition of relative. So market is important. So from now onwards, top 500 listed companies chairman has to be NED only. Okay. Then the listed company shall ensure that the approval of the shareholders for the appointment of is taken at the general meeting at a time within 3 months from the date of appointment, whichever is earlier. This also I just taught you all that if the board of directors is appointing any director, then they have to take shareholders approval quickly. Quickly means what? By the next meeting or within 3 months, whichever is earlier. Then this all is very simple, that there should be 4 board meetings and time gap should not be more than 120 days. Then quorum of the board meeting of the top 2000 listed companies. Very, very, very important. Okay, what is the quorum of the meeting of the board? It is 1/3 or 3 directors, whichever is higher, including one ID. So what is the quorum? So super important. I feel this can be asked in the exam. What they're asking, what is the quorum, okay, of the top 200 listed companies board of directors quorum. So as we know, in that company law we given 1/3 or 2. Here they've said 1/3 or 3, out of which one should be independent director. So top 2000 listed entities, 100% they will ask in the exam. Okay, then everything is very simple. Then we had done about the fees. Remember, this is also exam question, that how much remuneration of fees I can give to the BOD. So if the fees of these 2 executive directors who are promoters shall be subject to approval by the special resolution. If I want to give a fees of annual remuneration 5 crores or 2%, whichever is higher, or if I want to give more than 5% of the net profits, I want to give an annual remuneration, then in such case I will have to take approval of the shareholders by special resolution. Okay, this all is very simple. Now coming to the most important provision, we can say, okay, this is super important and also exam question. Regulation number 17A talks about the maximum number of directorships that you can hold. So a person shall not hold more than, sorry, this is here. So this is the answer. Okay, a person shall not serve as an independent director in more than 7 listed companies. Very simple. However, notwithstanding above, doesn't matter what we stated above, any person who is serving as a whole-time director in any listed company shall serve as an independent director not more than 3 listed companies. Okay, so what they are saying, max 7. But if you are already a whole-time director or a managing director in any company, then you can become maximum 3 companies only, not 7. Okay, then we see in order, similar to company law, you can write audit committee regulation. So I told you the code word, answer, risk, and then you have to write about vigil mechanism. So regulation number 18, 19, 20, 21, 22. Now we have to see risk management committee. Now you will see your risk management committee, when a risk management committee has to be appointed. Now obviously a risk management committee should meet twice a year. So a risk management committee is what? Every business faces risk. So company, listed company, which is a top 1000 listed companies, okay, have to have a risk management committee which will assess, find out the risk applicable to the company. Then they will see what is the response to risk, how do they rectify the risk, how do they minimize the risk, etc. Okay, so very, very important. Top 1000 listed companies have to constitute a risk management committee. So though this also they will ask you. Vigil mechanism is same as your company law. Then again regulation number 23, very important. Regulation number 23, it talks about related party transactions. Okay, now the listed company shall formulate a policy on materiality. Materiality means what is significant, what is not significant, or what is high value, what is low value. You have to say na, if company or director wants to do transaction with the related party of small amount, allowed. Company wants to do a transaction with related party like its subsidiary, allowed or not allowed, what limit is allowed. So that is called as thresholds or materiality. Beyond this, approval will be needed. Now also remember, a related party transaction shall be considered material if you are doing a transaction which exceeds 10% of the total turnover of the listed company. So obviously more than 10% it is already considered to be material. Now a transaction involving payments made to related party with respect to brand usage shall be considered material if it is entered individually or together with the previous transaction exceeding 5% of the annual turnover. Now again pay attention. Now my company is there, holding subsidiary, a holding company is there, and a subsidiary is there or associated. So both of them are considered to be related party, right? The holding subsidiary are also related party, connected party. Transactions between them are called as related party transactions. Related party transactions. Now board of directors will make that if there are major transactions between them, they are called as material transaction. Material transactions done between them, they will require approval of further extra approval. So here they are saying that a director or transaction with the related party transaction shall be considered related if it exceeds 10%. However, if it is with respect to royalty, for example, holding company has given some license and has given some kind of license, IPR, intellectual property rights, brand name, okay, and they are in the subsidiary or the one company is giving to another royalty. Royalty exceeding 5% is also considered to be material. Normally 10%, but if it is with in technology and IPR, it is kept as 5%. All related party transactions shall require approval of audit committee. Very important. Every single related party transaction will require approval of audit committee. Now we've given 10%, 5%, all I've explained. Now small transactions which are there, the board of the audit committee. Imagine Reliance Industries must be buying so many raw materials from its own subsidiaries, from its own group companies. Now when they do so, now auditor cannot check every transaction in detail. So they give a blanket approval. A blanket or omnibus approval for those transactions. Now when they give those transactions, they have to keep seeing in mind some transactions which are repeated in nature, small in amount. So they cannot give a omnibus approval for a transaction which is more than 1 CR. For this, when they give a omnibus approval, that means what? During that time they don't have to, the company can do those transactions, but they don't have to take approval again of audit committee, since the audit committee has given a general approval. Okay, then the same provision of your company law will apply. You have to understand one thing, that all the above regulations of related party approval will not apply when it is between two government companies or a holding company and a wholly owned subsidiary. Now these are very government, obviously for them they are saying the exemption is given, and holding and wholly owned subsidiary also doing transaction, we don't care, because for us it is the same person. Okay, now coming to the regulation number 24. Regulation number 24 talking about unlisted material subsidiary. Now what do you mean by material subsidiary? It is a 20% of the turnover consolidated income. So this is a subsidiary which has an income or net worth exceeding 20% of the group. Let's understand. Okay, there is a listed company, and this listed company has subsidiary 1, subsidiary 2, subsidiary 3. Now the group, the entire net worth of the group is 100 crores. Turnover is 100 crores of the full group. Okay, of everyone combined is 100 crores. Out of this 100 crores, 30% is coming from here only. 30% is coming from this. Now all these three are unlisted. All these three are unlisted companies. So what we will say that this is a listed company. It has 3 subsidiaries. Out of this, 1 subsidiary is material. It is a material unlisted subsidiary. Why? Because it is having a transaction of greater than 20%. So it has more than 20% of the total group. So that means we will say that it is a material subsidiary, important subsidiary. So what law says? Very simple. If it is a material subsidiary, the secretarial audits will be done of not only the listed company but also of this material subsidiary. So that is why, because we are saying they are very important. It's a very important subsidiary. 20% or more of the group turnover this is alone earning. Now what they have given you? They have told you 2 words: income or net worth. So remember that. Okay, the audit committee shall also review the listed company, but they will also review the accounts of the material subsidiary. And now, very important, they will also given you material subsidiary sum, which is very simple. Okay. Now regulation number 24A, super important. So this is very important. Okay, since it's about company secretaries only. So let's see what they are talking about. That every listed entity and its material subsidiary shall annex a secretarial audit report given by a practicing company secretary. Okay, every listed company shall submit the secretarial audit compliance report within 60 days from end of each financial year. Moment they say each means it is a annual compliance. So if they ask you annual compliance, please don't forget to mention your own business. Okay, your own, it is directly connected to you. So regulation 24A says that you have to do a company secretary in practice will do a secretarial audit of the listed company and as well as the material unlisted company, of every listed company and its material unlisted company. Okay, and this will be be submitted to the stock exchange and it will be given to the stock exchange. Clear? So very important. I think this can come. Now regulation number 25 talks about independent directors and the level of number of independent directors. We saw 7 and 3. Now I'm not going to repeat that again. Okay, all of this. Then they are saying that the insurance has to be taken. For example, if the director does something wrong, a penalty can be done on in the course of his work. Sometimes the work is only so hectic and risky that if you do, some loss can happen. So they get an insurance for the directors. So if they get due to any negligence or due to non-compliance, they got some penalty, then the insurance company will pay. Now obviously they try their level best to not fall into trouble, but if they fall, then the insurance company will pay. Now they are saying the top 500 listed companies shall undertake a directors and officers insurance for all their independent directors. Okay, so very important, you should remember this. This is given in your regulation number 25. Now coming to regulation number 26. Obligation with respect to employees including senior KMPs etc. A director shall not be a member of more than 10 committees or act as a chairperson of 5 committees across all the listed companies. Okay, so you can become a director shall not be a member of more than 10 committees obviously, and chairperson of more than 5 committees. This you can remember. Then again very important, regulation number 27. Regulation number 27 talks about CG report, corporate governance report. It's always a quarterly compliance. This is always a quarterly compliance, and that too if you see within 21 days from close of the quarter, a CG report is given to the stock exchange. So the listed company shall submit a quarterly compliance report, okay, on the how corporate governance, what they are doing. There are few markers that they have to do, whether they have complied or not complied, yes or no. So you can write. Okay, so this is it. Now prior intimation, and this intimation is SE. Now regulation number 29 talks about events which require approval or intimation before doing it. Okay, so before doing it, so it requires prior intimation about the meeting. So it is not after the meeting, it is before the meeting it will come. This is at least 5 days before, at least 2 days before, at least 11 days in advance. So they've given you few transactions and how many days before you have to inform. Regulation number 30. Regulation number 30 talks about which you have to inform after the meeting. After the meeting. So this is about this. Then comes about shareholding pattern, regulation number 31. Within 21 days of each quarter. So this is also a quarterly compliance. Okay, that the share, I have seen the shareholding pattern. What is a shareholding pattern? Very simple. How many equity shareholders are there? How many promoter are there? How many preference shareholders are there? Okay, how many, all those details will be given. How many classes of equity shares are issued? So all of that is given in your regulation number 31. This has to be informed on quarterly basis. Then let's see which is important. So I've covered mostly this, the important thing. Also remember the annual compliances. Remember which I was telling you, annual compliances. Now you will remember that the financial results within 60 days of the end of the financial year. Annual report. Annual report which comes to your houses when you have invested. So not later than the day of commencement of dispatch to its shareholders. Not later than means before that only, better to give it to the stock exchange. Regulation number 40, within 30 days of end of financial year. Initial disclosures within 30 days from the beginning of the financial year, and annual disclosures within 45 days from the end of the financial year. So just remember this, annual compliance. Now regulation number 33 talks about financial results. All the financial results will be done as per the uniform accounting policy. Here you can follow quarterly and year to date reports. Now what is quarterly, year to date? Very simple. See, normally financial results which are there. So if you remember, financial results come of companies, and after that the share prices fluctuate a lot because quarterly result is out. So this quarterly result, okay, when they are giving, they can give it a audited financial statements, they can give audited quarterly financial statements, they can give, or they can give unaudited quarterly financial statements. Now when they give a unaudited, means they could not audit it because for whatever reason, then it should be given with a limited review report of auditor, that he has, at least he has not audited, but he has seen a limited review he has done. And with this, they both have to give a year to date accounts. Year to date means what? From the start of the year till now, whatever accounts are there, that also you give. So quarterly, I have an option to give quarterly audited or unaudited. Normally when I give unaudited, because the time is less or I have still accounts pending. So the auditor has just given a limited review. Tata's always gives audited quarterly financial statements also. And year to date, everyone has to give. What is year to date? From the start till the year, whatever accounts are there has to be given, so that a record is maintained. This will be as per GAAP. This is what you needed to know. Okay. Now the listed company shall submit the quarterly and the year to date. See, year to date has to be given every time, whatever accounts you have from the start of the year till now. So quarterly results has to be given within 45 days from the end of each quarter, except the last quarter. Okay. In the last quarter, since they have to summarize everything, that is given 60 days. So annual audited financial statement shall be given within 60 days from the end of the financial year. So quarterly will be given in 45 days from end of quarter, whereas for final at the end of the year will be given more time, 60 days from the end of financial year. Okay, whenever you're giving unaudited, it should be with a limited review report of the auditors. Clear? We are almost done, so don't worry. Annual report. Every year the company will have to distribute the annual report. They have to put it on the website. It should be sent to the shareholders not later than the day. And also a copy of the annual report has to be given to the stock exchange also. Then regulation number 34 2F, business responsibility sustainability report. Now what they are saying, from the financial year 2022-2023, it is mandatory for all top 1000 listed companies. Now what is it? They have to say that what work they have done. Like CSR is there, corporate social responsibility, but this is a business responsibility report. Like what are they doing to as a responsible business? What are they doing to sustainably grow and do? So everything from ESG point of view, what they have done for the environment, what they have done for sustainability, what they have done for governance, full details will be given. So it is a reporting about the company's economic, environmental and social impacts caused by its business process. Okay. Then again, we had seen regularly for transfer transmission, they were saying. So that is your regulation number 40. Regulation number 40 says that a certificate from a PCS within 30 days from end of financial year has to be given, certifying that all the transfer, transmission, everything has been completed and done properly. Okay. Now then they have added your regulation number 41A as well. So they have added your regulation number 41A. They are saying the SR equity shareholders shall be treated at par with ordinary shares except in case of voting rights. Now we know that there are these special rights for founders. Generally we give, for startups we give them extra voting rights. So they are same as equity shareholders except that they have only additional voting rights. Okay. At no point shall this SR, special rights equity shares, exceed more than 75%. Okay. And then they have given you one important thing, one very important point, that SR equity shares shall be treated as ordinary shares in any of the following circumstances. Now even if you have these special rights, it will all be treated as ordinary shares in the following cases: when there is a removal of independent directors, there is a promoter is willing to transfer control to another entity, there is a transfer of control, voluntary winding up, changes in MOA, AOA. So all the important things, utilization of funds for other than business purpose, so related party transactions, and all these things, the SR rights will be treated as ordinary shares. Then the SR shares, that is the special rights which have been given to these founders of startups and high growth companies, it will be converted into equity shares on the 5th annual, within 5 years basically, within 5 years they will be converted into ordinary shares. So you cannot have SR shares, special rights for unlimited period. After 5 years, SR will become OR. Okay, the SR shares shall become compulsory OR in the following events. Now, even before the tenure, it can become ordinary shares if the demise of the promoter or the founder, or if the SR shareholder resigns. Then comes the dividend distribution policy. Now, regulation 43A talks about a dividend distribution policy. The top 1,000 listed companies have to formulate a dividend distribution policy, when dividend will be given, when dividend will not be given, what factors are to be seen while distributing dividend, and this will be put up on the company's website. So the following factors will be checked: circumstances where dividend may not be given, financial parameters that shall be considered while declaring dividend, internal and external factors that have to be seen, what should be the reserves ratio, etc. Okay, then comes voting by the shareholders. Voting by shareholders. The listed company shall submit to the stock exchange within 2 working days of the conclusion of its general meeting details of the voting results. The top 100 listed companies by market cap shall, as on 31st March every year, within a period of 5 months from the closing of the financial year, will have to tell the results of the voting of the shareholders. Okay, top 100 listed companies shall provide a one-way telecast of their AGM. So if you remember this, Reliance Industries' entire AGM was telecasted one way, means you could see it on YouTube also. So one way telecast of the AGMs has been stated. Okay. And that is it. We are done with the entire LODR in depth. Okay. And no other question can come from here. I have completed all in depth. So now you can go ahead and complete it and just check the past exam questions. I've covered those two. Thank you so much for your time. Okay. Thank you. So I have completed the full LODR. You can open up your module and now complete it. Listen to my lecture. It must be there for 1.5 hour. 1.5 hour full LODR I have covered. It's a very difficult and a 10-mark chapter in the exam. So go ahead and complete it and I am done. Okay. Sure. Thank you so much, guys. Remember, you can share this link with your friends. Again, I'm going to come up with a few more important sessions for your exam. So till your exams, I will ensure that you pass. Join the WhatsApp groups, download our Jahangir tutorials app. The link is given in the banner also. Okay, you can do that. Thank you so much, Harshil, for your patience as well. Okay, thanks, guys. Thank you, Murali. I hope you all enjoyed the lecture. I've covered LODR. Now you can relax, and whichever chapters I've taught, I've covered in depth. Nothing will come outside. Jessil, Joy, nice, to have all of you all. Remember, download the app, and Harisa, yeah, I took that one lesson specially for you. You're told this about this. Which one? Collective investment scheme. Yeah. So download the app. In the app, in the study material section, I will put out the PDF for the scanners. For EBCL, I had forgot, I could not do it. So I will do it now along with SLCM. Okay. At least drag your friends and tell them to attend the lectures, because I'm sure that I'm covering everything with the past exam questions and with the amendments too. Okay. That's very important. Anything else that you all want to say, you all need for my end? Yeah, Stuti, CIS. Now, remember, I am not done with my sessions. I will be coming up with exam series, which I will try to cover in a rapid manner. So whatever is needed to clear you all, I will be doing that. Join the, one more thing is, in my playlist, you will be able to see a lot of lectures which I have taken, revision lectures for you all. Okay, that is it. Yes. So Harshil, just you all can ping me also. In the app is also there. Also in the Telegram and the WhatsApp groups are there. Do join. Yes. Okay, Harshil, I will do that as well. Okay. Thank you so much. Good night.